but he's doing very well today. Welcome to the Mental Effects Private Mentorship. This is webinar. First of all, I gotta make sure you guys can hear me and stuff, but where's my course content? There it is. This is webinar 166. What a pleasure just to have everybody on here and to see a ton of familiar faces. Welcome, welcome, welcome. What's going on, guys? Okay, you can hear and see everything? Good, because I want to jump right into it today. Very good. Can see in here, can see in here. Looking attractive. Thank you, Luca. I'm sure you're looking attractive yourself. Afternoon from London. What's up, Adams? Happy to have you here, man. Someone free me. I'm in Anton's basement. Okay, very good. Good afternoon, everyone. You look fresh. Yeah, I took a shower this morning, went for a little walk, so in a good state to do the Webby today. So, first of all, first and foremost, welcome to, sorry about that. Welcome to the Mental Effects Private Mentorship, of course. Welcome to the webinar. Now, if you're brand new, welcome to the first time to the actual team. And before we go forward, I just want to remind you that you have made a very, very good choice in joining the team, and that you will learn a lot of things over your time here, as well as gain access to current tools, but also improving tools that are going to aid you in your development as a trader and in your actual trading, which I think is one of the most understated things that are here. I think it's a really cool thing because you guys know that one of the main things that we have at the moment is the screener, right? And the screener is going to have added stocks once again back to it, futures, and all the other things that a lot of people tend to trade. Kind of all the markets kind of across the board. But our main focus over the last few months, because we've been working with a few devs, is actually making this better, right? We want to create and add filters. We want to add filters through the lens of moving averages as well, because a lot of you guys, as I'm sure you all know, use moving averages as well in your trading and have some distilled rules that help you determine trend with them. So this is all in the works, and I want to remind you of that, right? Because one of the main portions and parts of the portal material too is to segue into the ability to look for events and look for moments that make the most sense for you to trade. And to do that, you need to be able to filter across a number of markets, across a number of potential tools, which is what we've been working on, very, very in depth. So I just want to remind everyone that's one of the main things that we're still trying to get down, that we're working on. What's it called? Putting in place the steps that it takes to line up the back end and the UI and the front end and the data and everything are the steps that are happening right now. And that is why there's like this mini moment of waiting, right? If you want to call it, like, if you want to look at it like a painting, it's kind of like this, right? Where we had the screener at its really, really nice, where everything was added, but it was only the MBs, right? Where you can kind of just see the models that were within: accumulation, reaccumulation, distribution, redistribution, because that's what it does at the moment. And then to basically connect this moment to what we want, which is the ability to add multiple filters, the ability to see how far something is up in a month, in 3 months, in a week, in a day, right? So you can actually start to pinpoint markets that are worth trading for you on your time frames. Where is it in relation to a 1 minute moving average, or 3 minute, or 5 minute, whatever it might be? To get there, we have to kind of undo some of the things we had. So right now we kind of exist here with the screener, where you don't have access to kind of all the markets. There's kind of just this little void that we need to work through so we can actually put everything that we had back on, but also have it with a ton of other filters, factors, and all the great stuff. Yeah, we have to go through a flush out. Exactly. So I just wanted to let you guys know about that, because I think it's important, because as I say time and time again, it is in my best interest to have this do the most it can. Does anyone know why that might be the case? Sure, I mean, because I love you, sure. And education becomes easier, sure. But mainly, and I'm not even gonna bullshit you, it's because, well, sure, it does cost a lot too, but it's because it makes me more money at the end of the day. if I can, the way I think about this and the way I want you to think about this, and the reason I'm starting with this today is, if you can quickly go through, I don't know, 30 markets, if you just trade futures, let's say you have 30 markets. If you can go and look at on the day how those 30 markets are performing or what they're moving like, or where they are in reference to some moving average on a validation time frame, on a context time frame. At the end of the day, being able to do that a lot quicker is going to give you the opportunity to jump on that thing and watch it for that given day or walk away. It basically smooths out the process of what you're going to have to do yourself, right? I don't want to get on every single day and go, all right, it's a new day, you know, here it goes. Create a new list for my futures, right? If I'm trading futures, here I go. I'm going to press add, going to go to the futures, and here I go. Okay, we're going to add NQ, of course, ES. Here, I'll just go through them like this. ES, gold, yeah, YM, oil, Bitcoin, you know, silver, whatever. You just add, you can add as many as you want. And I don't want to sit there and go through them each second by each second, right? 5 hour. Okay, where are we on NQ? Okay, we're above. That means it could be bullish. Looks good for potential bullishness. Let me look through my validation. You know, this is good. It looks good as it's in reaccumulations, moving in reaccumulations. Still has the ability to keep moving in reaccumulation if a move starts from this. Looks good. Okay, this is something I want to watch on this day. Here I can watch it. I don't want to have to do that for each and every pair. It's just not useful, to me at least, right? So I want something that's going to give me the ability to kind of do that without having to necessarily sit there and look through 10,000 pairs every single day, because that's what it comes down to. I want to be able to, where's MetaFX? I want to be able to know out of all the list of just stuff that I have here, like all these stocks, which ones are worth looking at. I don't want to have to go through them one by one now and go, nope, not ready. You know, maybe could be ready. Let me look at the what's it called? The daily or the 5 hour. Nope, not ready. You know, I don't want to have to do all this. So instead, I want to create the easiest version for myself, which is also by way of making it happen for me is going to make it happen for you. By way of making the easiest version of filtering for myself, it'll give you the easiest version of filtering for yourself, right? Now, the cool part about it not being done yet is that in the moment, at the time that we're talking about this right now, you can start to create some general rules around which you actually do end up trading. Something that I recommend a lot of you do is you go through a lot of the trades that you personally take, and just, even if you haven't used, let's say, each step of the EVC, which is the case for some people like to, you know, have their entry or maybe their validation and they're like, it's all good, it's perfect, I make money, right? And that's fine. What I do recommend though is that you get a general EVC. So this is again from the members portal section, as you all know, and the EVC is just simply the general blueprint for trends, right? So you have the E, which is your entry time frame. You choose that. You multiply by 6 for your V. You multiply by 10 for your C. That's very simple, right? This is how it works. This is the general idea right here. What I recommend a lot of you do, and I highly recommend, even if you're brand new, that you do this. No matter what trade you spot, no matter what trade you think is good, no matter what trade you see somebody else take that you like, that you're like, okay, this is a clean trade. I want to learn the rules behind it. What I recommend you do simply is you find the EVC of that trade. So in this case, you know, let's say your entry time frame is a 5 minute. Your validation is likely going to be a 30 minute. Your context likely a 300 minute, which is about 5 hours. Okay. What I recommend all of you do is you find the trades that you've taken, good trades, right? Big winners or nice winners that you're like, damn, this was really good. And I only recommend that you take a look at what had occurred on the 5, the 30, and the 300. In the case that you're trading a 5 minute chart. So again, apply this. If you're trading a 1 minute chart, just simply apply it to a 6 minute or a 5 minute, right? And then apply it to a 60 minute, so 1 hour. That's it. Okay, if you're trading a 15-second chart, right? Same thing. Just apply it to a, what is it, like a 2 minute, and apply it to a 20 or 30 minute. Doesn't matter. Again, remember, as I always teach, as I've always taught, timeframes don't matter. What matters is the timeframes that we use in reference to seeing the orders that we're interested in taking, right? In the orders that we're interested in writing. So if you're interested in writing the 15-second orders as your entries, right, you're generally going to have those line up with generally good price or context or story across the validation that is around 6x to a context is around 10x the validation. So these are the generals, right? Now, these are not perfect, but these are generally what I've seen work for everyone. So what I recommend anybody does to any system they trade is they take their given EVC, and I'm gonna go to one of my trades just this week that was really good for me personally. Actually, before we do that, let me actually, where did it go? Where did it go? And I've lost it, and I have lost it. What was it on, NQ? Okay, I've lost it. Perfectly fine. And by the way, guys, feel free to drop any questions you want. I will go over questions in a second, okay? So what we have, as I said a second ago, is you want to primarily find what your main EVC is. So in the event that you enter off of a 5-minute, simply write it out, right? So your E was the 5-minute, your V was the 30-minute, and your C is the 300-minute. This is my personal system for a lower time frame based entry, okay? This is all I use, generally. And even if you haven't done this yet, the reason I recommend you do this is because it's going to create filters. It's going to create a lens through which a good setup manifests. You're going to notice that there is a time where a setup becomes really, really good. So I had some really good entries, okay? This was like my entry of the week. I think I made over like 10% off of this from our R, and I'll show you guys why. So again, this goes a little bit, this is not perfect because again, I'm putting this in for the data collection just to keep it updated for some of you, just so it looks good. And you understand like kind of how I'm putting data in if I am to do something. But I'm gonna show you guys something. So this is the trade that I made around 10% on. Now it's not actually 11R that I made. So I actually, if you add it up yourself, this was about 5.6R. So like 5.6R or so. But again, it was at 1% risk, which is double what I'm usually doing. Okay, so this was at 1% risk. So as a result, this actually is at 0.5%. So again, these numbers are not the exact numbers. I just want you to all remember that. These numbers are general, and I'm kind of showing you firsthand how in the event that you're creating notes or creating data and you're going through that data, how you can take notes, how you can take those notes down and actually put them into your actual charts, into your journals, right? So you can actually kind of split up how your risk might have been taken, because some of you might be taking higher risk over some time, some of you might be taking lower risk, whatever it might be. So I just did that here, right? And you can see I even had a -4RR because this was not a -1, it was about 4x times the risk, right? So it was about a 2% risk or so. What was the reason you used 1% risk that time? These are just smaller stocks that are very, very liquid, and when I haven't taken a ton of losses or multiple losses in a row. So again, if I take multiple -4s and this comes dipping down, then my risk goes back to standard. But I spoke about this a few months ago. I think some of you that have been here a while might remember. But at all-time highs, at basically all-time of all-time highs, when I'm pretty much at no drawdown whatsoever, I allow myself to increase risk, especially on very good trades, because, well, I know that in general, I mean, you can kind of see by this. In general, most of my trades are going to end as a winner, so a tiny winner, or as a break even. In most general circumstances. So if I'm at all-time highs on an account and I'm allowing myself to go into normal drawdown because I'm okay with going into drawdown and then normally trading as I normally would back at reduced risk, I'm more than happy to take trades at an increased R multiple per R, because all it means is that in general, nothing's going to happen to the curve. But in the event of a win, well, you know, you see very quick flies upwards. Michael says, so when there are a lot of 10s, you double down. Double down. I don't double down. I don't know what you mean by that necessarily. No, I don't double down. I'm very much against doubling down, or against averaging down, or against martingaling, or whatever you want to call it. I'm very much pro sound risk management, especially as you go down, right? He's talking about the -4R. Yeah, so the -4R, which was this one, was on that one loss, right, on Govex. So I'll show you. And this was a very bad loss too, because if you guys notice something, what should this trade have actually been? If you just take a look at it, yeah, I'll just show it like this. Based on just looking at it, what should this trade have actually been? I just want to know what a lot of you might say based on the rules that I've kind of taught here for a while. Not about stages, in terms of the actual R multiple. BE. No, this actually should have been a break even or a win. And the reason for that is because this is the stop that I wanted to have, was this candle low right here. I'll actually show you guys this on the actual chart really quickly. Yes, I'll go over the trade, man. So, you guys will probably see it when I draw this line out. But this is one of those moments where if I had properly followed my rules to a T, this should not have been a loss, okay? Again, I didn't put in a hard stop or whatever, right? Because I don't usually put in hard stops. My hard stops are usually like a little bit under, and then I'll market execute the close, almost always, right? But the reality here is I market executed a close at a point where I hadn't crossed the threshold of the actual low, right? So the reality of this trade is the management that I had on it initially was management that was still holding, right? It was a trade that I was not incorrect about. It was not a move that had actually failed itself, but regardless, I ended up taking the loss at the last point of the last point. And I think this is great because psychologically, I see this get traders on both sides of the market. Because I know a lot of you have experienced this too. On the bullish side, like let's say if you get positioned into a long, what tends to happen to people if they have their TP here and price comes here? Almost always, what is the question that we tend to get in the Discord when this happens to someone? And this is consistent. Month after month, there's a question along this. Yep. Pess and Joey, exactly. And Karar, yep. And Shizen too. The question instantly becomes, hey, you know, like, I missed this trade, right? It came up, it almost hit my TP, but then it did this. Should I take less RR from now on? Should I close earlier next time? Should I do XYZ? And the answer is always no, right? Because it doesn't matter that it did that. Because theoretically, if you have your TP set here for whatever reason, whether it's fixed or whether you have a very specific rule by which you've decided this, if you're not using a more kind of experience objective-based approach where you're like, in the event that price is going, and then price starts losing momentum, I'll close. If you're not using something like that, then there's nothing for you to do other than let that trade come back to break even or to loss or whatever it is. And the same thing happens on both sides of the market. And a lot of people make this mistake because they start thinking, hey, you know, price almost reached my TP, so I should be closing earlier. That's not the case at all, because you're profitable if you don't do that, right, already. So that doesn't matter at all, as is. And the problem, let's go over the very quick problem. What is the problem if you or anyone else says yes to somebody that closes a trade earlier here? What's going to be the problem in the future for that same trader? Yeah, slippery slope. The problem is that next time when prices are here, what's the trader gonna feel when price is here, but they know they can usually close here maybe? Well, it's so close to my normal close. It's so close, I'll just close it here. So each time that you allow yourself to make a dumb rule like that, you lose maybe 0.1 R. But now if you do that 10 times, or over 100 times, you've now guaranteed a loss of -1 up to -10 R. Right? You basically guaranteed that you're going to lose more over time because you're incapable of understanding that the trade is not worth just randomly changing your rules because it came close. I don't care that the price came to this point. It doesn't matter, because in the event that you're using a fixed TP, you need to follow those rules. Now, it's true that if you're using momentum based, so let's say I took this entry here. So I missed it, but whatever. Let's say I took this entry here. If I have a set TP of, let's play the game, of 11 RR, what is this trade going to work out as? Well, right now it could be anything, but this trade is fine to become a break even. If your normal TP is 11R and that's all you've tested and that's what you know is profitable. I don't care that it reached almost the top and came down. It doesn't matter. The actual action itself doesn't matter because the math and the data speaks for itself now. Now, in the event that you have a system based on momentum loss, that could be a different story. For instance, someone following this might say, okay, as price begins to go and as it makes a down candle, I'm happy to take out some risk through the momentum loss on the downside, which guarantees that you're going to be getting some partial if price begins to lose. So then you get your partial or whatever, and then you keep going, which is why a lot of you might know my system orients itself around partialing into strength usually above 3RR, 2RR, usually above 2 to 3RR, so I'm guaranteeing at least a higher return than 50% win rate. And then to let the rest trail into some kind of weakness. This way, on average, if a move truly does begin, like this, I'm not stuck looking for a 20, 15RR gain that misses it by a few points. So those are one of the rules that I introduced into my system early on because I didn't want to play the game of I have my fix and I'm gonna let this play out like this. Because I wasn't interested in that, because I'm aware and have seen over and over and over again that when prices make a move, I can partial into the strength, make my money, and if it wants to keep going, I'll make more money, right? So that's just something to keep in mind. But that's a mistake that I personally kind of made here. Now again, I don't beat myself up for it, right? Because again, I understand I'm executing these manually, so it's okay that, I suspected this was going to drop through this. Now, yes, it should have held on, came up, made this move, and I would be at break even probably around the time this price was here. And then this would have become a break even trade, or even a small partial. I don't know. It might have been a small partial here, but likely just a break even trade off of this, right? This should have become a break even. There you go. But that's not what happened, and that's fine. I don't sit there like pondering and beating myself up over it because I'm aware that I'm a trader. And I'm aware that mistakes are gonna happen from time to time, but I'm also aware that my consistency is going to make me money, all right? And that's really it. So let me scroll up here. Okay, yeah, so what I was saying, sorry, I almost forgot. Adding all that stuff to the screener, yes, Alex, thank you. So what I was saying is, for a lot of your trades, what I really suggest that you do is you take the EVC of them, even if you don't use the potential V or the C, just get the general blueprint, and look at where price was on each one of those time frames. So, for instance, on this trade right here, I already know the fundamental trend template that price was in before this entry. I'll actually go back here, just like that, before the entry happened. I know, before I look at anything else, because of my own testing, because of my own images, because of what I've gotten used to in my own trading and my own filtering, that when I go to the V, the 30-minute, the validation time frame, prices are going to be likely just above or on the 10 and 20, okay? And they will have been going sideways on the 10 or 20, or price has already come out like this of the 10 and 20 and is now just a little bit higher. This is what I know is going to be happening on the validation time frame. Why? Because I've done this exercise with myself. So let's go ahead and take a look. With this exercise in mind, if I go to the 30-minute now, what do you spot in regards to what price is doing and where it is? Does that line up with what I'm normally used to seeing, or what I want to see from my trade on the V, based on what you just heard? And again, this is going to apply in a second to the NQ trade that I took, because it applies the exact same way, because somebody asked me about it in a second. But the answer is yes. The validation has been above or just above the 10 and 20. Price has started to move into a stage 1 on the 10 or 20, or has just started coming out of that stage 1. Now, it depends on how you draw it. But again, if you just don't think about the little line that I draw, think about stage 2, stage 1. Price is, if this is a stage 1, is price coming out of a stage 1 into a stage 2? Has that been met for a validation? Yes. If prices are supposed to be just at a stage 1 going into a stage 2, is this also the same thing? Yes. So this should also lend you a little bit of leniency with understanding that a stage 1 is not a perfect line, because I see a lot of people see me draw sometimes a line, like a line above or something that looks like that or whatever, right? And they're like, what's the special sauce behind your line? Who are you connecting and where are you No. I'm seeing this and you see me draw something like that. That's what you're seeing at the end of the day. It's not a special line. It's not based on anything necessary or crazy. It's just based on the fact that a stage 1 and stage 2 is delivering, and that I'm expecting in general that price is going to likely start a stage 2 if it gets beyond this point or something. Members Portal supply line. Yeah, I haven't gotten over it yet, but that's what I call the supply line. That's it, right? A lot of supply is coming into the market under here. That's the supply that's being demanded. And as that basically gets taken out, or as price moves above that line, or above the stage 1 line, the box, whatever you want to call it, here, I'll draw a line like this. Does everyone understand how this line right here is the same as me drawing you know, a line like this, or like this, or like that, or like whatever, however it is that I draw it. So understand that this is basically just a stage one representation. All I've done is I've taken a box and I made it into a simple line. Okay, that's really it. Okay. So the simple expectation is that when prices move from a stage one, or the end of a stage one, it's likely going to move into a stage two. That's it. There's nothing more to it. And that's where I want to enter. And you can see, actually, if I go to the 5-minute entry, you can see where my entries began, right? I started to take entries out of the overall accumulation, otherwise known as a reaccumulation, otherwise known as, what is the rule, the general rule that you see here, when prices move and then take out some kind of interstructure low. Yep, the higher low anticipation, exactly. Right, so again, that's just simple reaccumulations, but that's how it's now taught in the mentorship, right? That's just simply a accumulation, whatever you want to call it. So once that's happened, right, I'm aware that MBs are going to start forming to the long side. And then, you know, if I don't get an entry, maybe price goes higher first and then makes an entry up here, right? This would be one of those examples where on the validation time frame, if I traded right here, would that be A, just out of the stage one? Or would it be still in the stage one going into stage two, right? So which one would it be on the validation? If I was to trade this entry right here, this one up here, if this happened. So a lot of people are saying A, it's actually B. Sorry, a lot of people are saying B, it's actually A. Right? Because what's happening is, like I just said, I know that for my entries on the validation time frame, prices are just going to be coming out of the stage one or are just at the stage one going into stage two. Right now, kind of under this supply line that I drew, the stage one of the higher time frame, prices are in B. But if I'm taking an entry up here, right, that puts us into A. And if I take an entry up here, if you think back to our prior webinar, so the webinar we just had 1 week ago on the last Sunday, what would this concept be of taking a trade, let's say, here? And again, by the way, guys, if you're new, it's perfectly fine if you can't answer that right now, but as you should be aware, your goal right now should be going through the most recent 10 to 20 webinars, because in general, it's just going to give you a good eye as to what we're doing now, as well as the portal material that's going to be continuously improved and added to in the coming days. Because again, I want to get some of the screener stuff done. But yes, exactly. This is from the concept last week as a different type of entry, even though it's meeting the same rules, right? It's an MB-based entry, everything's the same, but the reality of where it's happening changes either the way that you approach the entry or changes whether you take it at all or not. So what I mean by that is, let's say you're someone that's intermediate. Let's say you're not new to MentorFX. You've been here a while. You've been a decent trader. You've understood what you're trying to do. Let's say all your general entries have found themselves to be along these lines, where you're within the anticipation of the higher low, which is also stage one of the validation. So you're inside of one of these areas here, and then you get this entry, and these are the entries you tend to trade. The MBs just coming out of that area. If then an MB, let's say you don't get this entry. Let's say instead this entry doesn't even get set up. Let's just say it starts going, then it pauses beautifully on a rising 10 and builds a perfect MB. Should you take this entry? So this is where a lot of you fall short. The answer is no. One thing that I just prefaced that entire explanation with, right, is that you are an intermediate trader in MentorFX who has tested one thing, which is entries here, but what's happening is you don't get that entry because price just goes and then sets up this entry. The reality is that's a no, because this entry here is what? It's different to this entry here. Those are different types of edges. They require different kinds of management, of approach, and of understanding. So again, this is where you see a lot of traders fall short, because not that they're doing something completely wrong, but because they learn one thing and they decide to apply that one thing everywhere. So when they apply one thing that they learned everywhere, what happens? They tend to get chopped out more. they tend to get more and more confused. And then you see the general and the used to thing that you see happen, where it's like, hey, sometimes I'm making a lot of money and doing very well, and other times I have no idea what I'm doing. Price is chopping, going up and down and not giving me entries, but giving me the entry and not moving. What is going on? Well, what's going on is that you are inconsistent in understanding that these two trades, let's call it type 1, this is trade type 1 right here, and this is trade type 2 right here. You're not understanding that these are two different types of trades. You're simply assuming that because they're making a box or an MB, that it's a good trade. Or even better, if you're used to seeing price go flush out and then make an MB that gives you a good entry, if that's what you're used to, imagine if price goes, flushes out, it goes, flushes out, but then it goes and gives you an MB entry here. By way of just an MB happening after a flush, are these the same entry? By way of just an MB happening after it starts moving up, is this the same entry? It is. It is. By way of just a flush to a move, that's an entry. Flush to a move, it's the same entry. Is it the same entry in regards to where the price would be on a validation time frame? In regards to where it would be on a moving average time frame? Would it be the same in regards to where it is on the MB? No. And that's where, again, this is a simple example, but this is where a lot of traders go wrong. They don't focus on one setup that can make the money. They focus on one setup, but they prorate it to everything. This is what you see in the retail space as, whatever you're taught. The isosceles triangle entry, the up and, or like the equal top, bottom, whatever. When you apply a pattern or a thing happening to everything, you lose, you lose, you lose, you lose, you lose, you win, you win, you win, you lose, you have no idea what's going on. When you begin to focus on what are the differences behind some of these trades, it changes the entire approach. So, as per this example right here, those are two different types of trades because of where they are on the validation of the context, which is why I'm telling you about this thing right now, this webinar. Your focus should be to get the photos of these things. So, okay, I know that for this entry, the validation for me is going to be at a stage 1 or just at the tippity top of a stage 1 going into a stage 2. At the 1020, that's what you see. Price starts at stage 2, price goes into some kind of stage 1, and look at where the entry ended up being, right? Does everyone understand, just from a standpoint of stage 1, stage 2, without even necessarily me going over it in the portal necessarily just yet, because I know in the portal I've covered a very starter point of stage 1, stage 2, which is based on the entry time frame. But when you look at this, does everyone understand why this entry is being taken with the realm of stage 1, stage 2 on the validation? What's looking for on the validation? Okay, good. Now again, before I even go to the context time frame, the C, I know what I'm going to see. See, I'm going to see this on the C. Okay. In general, on the context time frame, I know that I'm going to see price above 1020 EMA. Likely in a stage 2. And potentially, as something that I've also noticed, stair-stepping higher, almost like with fractal MBs. I know this is what I'll see on the context. Why? Because I've studied my entries over and over and over again to know what is generally going to be happening over the blueprint. Let's go to the 5 hour. Where is price? Way above the 10 and 20 in a stage 2 of some sort. That's it. And as everything lines up for an opportunity of a trade, right? I took the MB entry through the top and this went insane out of the gate, right? This does not usually happen. This was a crazy one. Now I want you to I just want to also bring your attention to the fact that, this didn't happen out of nowhere. And what I mean by that is if you pay attention, look at the first trade I took. This is the first trade I took right here. That one. Okay? This one right here. I broke even on this in this black candle right here. That black candle broke even that trade for me. That's it. Okay? Then I took another entry. This black candle here, or this white candle, I forgot which one, broke even that trade for me. Okay? For a lot of people, for a lot of traders, if they had something like this experienced, what do they start to believe about that market, about the condition of that market, or about what they're doing? They start believing that the market's not worth trading, or that it's really hard to predict, or that it's not right, it's not ready, it doesn't work. Yeah, all the things that come with it. But the reality is, if I now said, let's delete all of that. If I now sent this, just this, with nothing else, if I just sent this, right? What does everyone start to believe? It's a clean trade. Yeah, it's clean. It's easy. It's perfect. It's a great MB. Why wouldn't you take this? Well, I agree. Why wouldn't you take this? One of the reasons people don't take it, or they don't trust themselves to take it, is because they normally performed like they should have on the prior trades before it. Now, what if I traded here as well? That also would have been a break even. Someone might have even traded here. That might have been a break even or even a loss. No, I agree. Okay, I agree. I didn't trade these for a reason as well. They could be too low or whatever, but I'm saying these are still MBs. And these are still potential entries someone might take, right? The point is, you cannot just assume that because you're taking break-evens or whatever, that the trade is bad or that the market is bad. Sometimes it does require a few attempts. Sometimes, funny enough, I'll take a break-even followed by the biggest win I've ever had, right? Like, if anything, let me show you guys this trade that I took a loss on. I want you to really pay attention to something. Look at what happened after. I wrote these down. I drew them on because, again, I want you to remember that I miss trades all day long, guys. I miss trades 24/7. 24/7 I miss trades. Trades that could end up being insane or multiples, right? It doesn't matter. But now also something really cool is I can go back over this and say something along these lines, right? This is the 5-minute. What do you think, if I go to the 30-minute, am I going to see from these entries? Even when they're losses. What do you think I'm going to see? Because remember, I did the thing with myself. I took my rules, I tested them over and over again, I got used to seeing what they tend to do. Okay, 30-minute, people are saying what should it be? It's in stage 1, above 10 and 20. No one said the 10 and 20 thing, but that's what I'm going to be looking for. I know if I go to the 30-minute, price is going to be likely above the 10 and 20 in a stage 1 or moving into a stage 2. Stage 1, stage 2, stage 1, stage 2, stage 1. Where are we in this trade when I took it? And the future trades that I was considering taking? Just at that stage 1 or just above? Is this bewildering? Is this breaking minds? Or are you going, yep, you know, this is what we've generally been learning. You know, this is... Joel says, why pass on the next 2 trades? Because I was trading CING. So during this time, you can see the time, 115, 120, 130, 130, 135. I was in these. Here's that 120 or so. I was just looking at something else. That's it. Because my eyes can't be on everything. But yeah, that's why I missed them. That's it. Why haven't you taken a trade in the current stage 1 on GOVX? Where? Where? I see no opportunity here. Right? Maybe on Monday, if price opens up, right? Starts to move, and there's a trade here, then I'll take it. Right? I don't know where else I would trade it though. I don't see any entries in here looking like the entries here or here. I don't see it. So again, this comes down to the same thing I just spoke about, right, a second ago, which is that just because you can draw a box or an MB doesn't mean it's a type of entry that you should be taking, or that it's a type of entry that lines up with what you look for. This is huge, because again, the person that doesn't understand that this trade here is different to these trades here is the same person that is going to manage poorly, manage differently, manage the same as they would have managed before, and as a result, take more losses. Third time, I just didn't go, and it went. Yeah, inside of these areas, yeah. Okay, so before, so let's go like this. Okay, guys, so that's what the 30-minute was doing. Even though it's a loss or whatever, that's what the 30-minute was doing. Now, if I go to the context, the 5-hour chart, what do you think, based on what I've already told you, based on what I've personally tested, what do you think the 5 hours is going to be doing? Oh my God, no way! Above the 10 and 20, in some kind of stage 2. Okay. Let's go to NQ. Here's a trade I traded this week. Now, honestly, I think I was way too late to this. Looking back, I kind of dislike this trade. If anything, I would have preferred this. Whoops. I would have preferred this to happen here. Okay? Just to make the trade better, in my personal opinion. Okay? The better trade might have even been like through this high, like that. Something like this. But that's okay, because it can happen. Someone said, you BE very fast there. Yeah, I broke even on this trade, just so you know. Right as this candle put in this low and just went to bullish, basically. Like, literally on this candle, I broke even. Not even before it crossed the high. I was break even on this there, okay? Like, fast as you could even imagine. Well, 10 minutes, 5 minutes or so. But yes, very quick. A very quick break even. Nonetheless. Here we are. If I go to the 30-minute, what is price going to be doing, and where is it going to be? I've given you a few rules that I already follow. I want to hear all of them. Not just stage 1 at the top. Yep. Sloping 10 and 20 upwards. Price just coming off the 10 or 20. In a stage 2, just out of a stage 1, or still within the stage 1, right? Okay. Here we are. Price moves off. Goes back to rising 10 and 20, kind of moves sideways. This was a nice entry in here that I didn't take. News, I think this was news right here. News drops. Price comes out of the stage 1. And I followed the move from there, right out of the stage 1. Kind of initial candle out of stage 1 to continue that move. If I go to the 5-hour, what do you think you're going to see? And there's where I traded. I just want to remind you guys, this is where I traded. This is when I traded it. Price above the 10 and 20. moving in stair step stage 1s and 2s, stage 1s and 2s, price just coming out of a stair stepped stage 1 into what I suspect it to be a stage 2. Is this rocket science beyond the highest degree? Is this me looking at order books and crazy other things? Or am I using a general system of EVC to get positioned with momentum when momentum is proving itself to be there? Alex says it's not, but there's always but. What do you mean by that? I make you proud. I'm glad. I'm glad I'm making you proud, bro. I'm very happy to hear that. And yeah, just so you guys understand this, because I really want this to be understood. Let's go to a 15-second. I want to show you guys where I broke even. Because I didn't have a 15-second open. I believe this was the down candle made. As this moved higher, I believe I broke even into like around this time right here. So it's not going to show you exactly where that is unless I maybe side by side it. Maybe I can side by side it. Hold on. 5-minute auto. Okay. Yeah, so it doesn't let you see it properly, does it? Okay, nice, nice. Yeah. So I entered through this guy right here. So assume this is entry price. Okay. I believe around here is already where I was break even. Actually, before it even took out this high, I don't know why it's showing it like that. Let me see if I can do this. Okay, good. There we go. Yes, there we go. As this transitioned to a white candle, I literally remember this. Over this, I was at break even. Yeah, so right here, I was at break even. Okay, so I just really want you to understand this. Right here is where I was already, like, before this even happened through this high, I was at break even on this overall move. I expected this move to instantly become a break even, just so all of you understand. I expected this to break even and then go through a new flush out, right? And then build a new stage 1 to start a new stage 2. That's what the expectancy was. Because a lot of these trades, especially when they've started, don't tend to do the thing that you want, which is just trend, trend, trend. They don't happen often. But it started. All right, it started that move, and then I partialed into, I think, this next candle right here. As this moved from green to red, or to black, whatever, I think I partialed right in here, through the low. I think that was my first, then I was ready to get stopped out, break even, and then this thing just started, I believe. Right? Yeah. And then it went and went and went, and I just trailed it up. Let me go back to the 5-minute here. Go back to the 1. Get out of this, go to this, go to this. Yeah, there we go. And I just trailed this thing up, and up, and up, and up, and I got stopped out, I believe, right here. Right through this candle low. As it lost the 10, and then took out the low. Maybe, I think it was this one or something. One of those, it doesn't really matter. Do you still use a 200? I haven't seen it on your charts. Nope, it's not on my charts. Is this a trade you take, and why? I have no idea. Because that's not how I frame trades, personally. I mean, maybe, I don't know. I can't make like a trade off of what I see here. Do you mainly use a 50 for context, or does it fit in your trading plan? It helps me establish where I am in the trend. I don't use it for any like crazy particular reason necessarily. Price just tends to kind of, when it's trending on a validation time frame, it tends to just drop into or just above the 50 to continue, just like this. gonna keep going. Meant, do you still use your validation time frame to take your second partial? No. Well, I've never used it specifically for that. I've always used a hybrid between all of them. You still using SMA for validation or just all EMAs again? Right now I'm on just all EMAs because I hated switching so much. It was a lot of work. So I'm trying to get used to EMAs. Makes sense, thanks, no problem, dude. MacBook Air. The better question here is, would you take this trade and why? Walk me through why this trade is a trade that you take. I think that's much better than just giving me this and saying, would you take this? I don't know, maybe. Looking at it, probably not. Entry time frame wise, I don't like it. Maybe if it springs up, comes down, maybe something around there, sure. I don't know though. Or is it on the validation? What's it doing on the context? Is it something that lines up with what you look for? If so, then yes, then it looks like a great trade, right? Mr. Not Perfect says, for my testing on the 30-minute, a good reset is price going below the 50 if it's a good stage one. Yeah, that can happen. Price can just under tap the 50, just like undercut it a little bit. Yep. Like if we look at the trades I took, right, like you can see here, the 50 doesn't really matter. Once we've started the move from the 50, it's going, right? Now it's flushing. So yeah, maybe now what it does is it gets supported somewhere around here or a little bit later. I don't really care, right? All I know is it if it loses this and then comes down, it's already dead, right? It's a dead market. But if it comes down, maybe, you know, even undercuts, starts going up, maybe it comes up and then starts to build something like this, right? Some kind of stage one. So stage two, stage one, I will 100% be looking to trade this thing higher, right? There's no reason that I can't. Same thing goes for this this GoVex thing, right? Like you can see, it started its move, stage one, stage two, stage one, stage two. It came down, flushed out to just around that 50, right, on the 30-minute. Started building that stage one, went to a mini stage two, stage one, and then from there took off for the stage two. Then mini ones, twos, ones, potential twos, right, which I'll be happy to take. Or we start getting a new larger term flush out that comes, you know, maybe catches itself on the 50 again, and then starts a new move. Because again, the price just repeats itself, right? This is all it does on repeat, over and over and over again. Yeah. And you can see this on anything, right? If we go back to my GBTC trade, again, you're gonna see the same thing. If you guys remember, this is where I traded it. Does anyone remember this, actually, back in the day? Back in the day, 2024 February. Does anyone remember when I traded this thing? Right, like, I mean, take a look at what it did, right? It started at stage ones and two moves, right? Stage one, stage two, stage one, stage two, stage one. Started a much larger flush out. The flush out came to or just around the 50. From there, it started what? A stage two into a stage one. And look where I traded it. I don't know if you guys remember. I traded it around there. Right? And this just happened to be one of those guys that just went. And then if you guys remember, it flushed out, again, to around the 50. So the guy that asked me about the 50, validation time frame, remember, validation. Started to move. And I began to watch this thing for longs. Where? Does anybody remember that I took like a break even or a loss in here, I think? Right? This is where I traded it. This is where I traded it again. Right? And then recently, does anyone remember what happened? Price did a much bigger flush. Honestly, this should have been the message to look away, basically. That should have probably been the message, and it could have been from the fact that the 50 had began to not just undercut, but to slope down, right? However, that said, I did try to watch it again around here, and I was ready to take a trade on it in here, but then it gapped up and fell off, so there was nothing, and then it really died off. So I didn't get to take anything on this. But if anything, what you could do, okay, are you ready for this, guys? I could just flip this, invert it, and look what you might see. Price starts a move, undercuts the 50, starts a stage two, stage one. What's the next move on this, guys? And welcome to a bearish Bitcoin market. What? Where did it come from? Right? That's it. your analysis, your approach to the markets does not have to be a really, really insane, like complex thing, but this is generally what I'm looking at and what I'm doing as I'm looking at markets, right? I'm establishing where I am along the general 3 lines. I'll look at the 5 hour. All right, I mean, this is getting ready for a move lower. Right now, it's kind of above the 1020, so what I would wait for, right, is a move lower, and then that's it. So probably around this point here. So basically, let's go look at real Bitcoin USD. Bitcoin USD. So basically, if price kind of gets to 58-ish, when price gets to 58K-ish, okay, we're around there. Because it's going to be then below a sloping 10 and 20 lower, and then the 30 minute, as we look at this, we'll start making a move lower. Well, right now there's not much to do. Let me go back to my, oh, we were on the dailies, right? We were on the dailies for this? Yeah, we were on the daily. Sorry, so it's all a weekly. Sorry, I'm so dumb. There we go. This makes more sense. Yes. The weeklies now, as the context time frame moving down below the 10 and 20, this is ready for our move down, right? So now, okay, that makes more sense. Yes. So, you know, this is supposed to literally, what? 42K, 40K? 44K? Right, zero reason this thing doesn't go to 44K. Zero reason. Right, and by then, I can guarantee you most people are going to be out of this market. And fed up with Bitcoin or whatever it is, you know? Because that's how the market works. That's how the market functions, okay? Oh yeah, this is beautiful. So we started at stage 2. We got into the stage 1, and right now, like again, if you want to draw your stage 1 or supply line, whatever you want to call it, right? In general, right, that's what you're going to see. Okay? 60 minute or so. So here we are. Okay, you're having your, check this out. You have your anticipation of the higher low rule already met multiple times. So you're in clear distribution or inverted accumulation, right? You can see the move almost. You can like literally see the move in front of you. What's this thing gonna do if it wants to set up good moves for you? It's gonna start putting in MBs. These are gonna be like the lower MBs that are good or like powerful. Then you're gonna get the impulse-based ones, right? More chop that might take you out or might keep you in. And then, right, like, and then you're at 48K, whatever, 46K, 47K or so. So like if I was, you know, gun to head, what do you think about crypto? This is what I think right now. That's it. That's all I would do. Let me flip it back over for everyone. That's it, right? It doesn't have to be complicated. It just has to have, you have to have a bias. You have to have an understanding about what you're expecting at a price. And then as that expectation plays out, that creates opportunity for you to get involved. That's really how the market operates, right? So when I'm like looking at something like this on the day of or whatever, right? When I'm looking at something like this, here we go, on the day of, just like that, okay? And then I'm looking at the, I see it, I'm like, okay, interesting. Look at the 30 minute, and then I see this. All I'm thinking is, okay, you're, you know, this on my higher time frame is definitely in a bullish state, in a bullish context, whatever. This thing is definitely putting in its stage 1, right? And I can draw my line. It doesn't matter what you do. The reality is if price kind of gets in or around this line, we should see a new stage 2 begin out of this market, which should lead to probably action, right? So if we look at this, here's your anticipation of the higher low. So really, if I was to draw it out again, some MBs on the lower side will form. Some maybe a higher one will form, or it'll flush out and make one here, an MB. And then as the move starts, it'll either start and give you another MB here, or it'll just start and give you some more MBs here, which will be much more faster paced. And they will result in quick moves that then will result in failure to set up new moves, or no failure to follow through with a crazy move that will then fail later. Does everyone see how this setup or this drawing is exactly the same as what I just drew for crypto, for Bitcoin on the opposite side, right? Because this is the general like kind of blueprint of what prices will do. So then you get your move, You get your faster based moves. Those are your faster based moves that then end up flushing out. And those flush outs might take you out. Or if you somehow get kept in, that's what's happening here. If you somehow get kept in, it should make another move or a bigger move or whatever. Oh, and this just flushed out. So you don't get to survive the flush out. And that's it, right? And then you wait for it to reset and to do it again. For buys, from Adamski, for buys, does your context time frame must be above the 50 or just 10 and 20? 10 and 20 is enough for me usually. I haven't paid attention to much of the 50 on the context time frame. But I suggest, based on this webinar, again, you go through your trades and you look at what they're doing on your context time frames. In this case, it's way above the 50. In NQ's case, it was above the 50. In GovX's case, it was way above the 50. In CING case, it was above the 50. In my Bitcoin trade, when I traded it on the 60-minute, right? Technically, 60-minute. Back here, sorry, that's the 60-minute. You can see where it was inside of here, but if we go to the weekly, which was the context time frame at the time of that entry, it was way above the 50. Right? So yeah. By this principle, should this be a market you ever consider long, given where these setups were and given where these setups are? Exactly, the answer is no. So this is what's really cool about patience in trading. If this was your setup in general, this one right here, if this is what you're looking for, what would you tell someone, or how long, because this is a weekly chart, would you tell someone they probably have to wait before this is even in a tradable context? Weeks to months, yep. Because even if it starts accumulating right now, you'd need probably 1, 2, 3, 4, 5, 6, 7, maybe 7 weeks, 7 to 8 weeks if it starts accumulating now. But if it probably does what it's gonna do, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, maybe even longer term, 16, 17, 18, 19, 20, 21, and then 22, 23, 24, 25, and then we from here can start a move. You know, 25 weeks times 7 days a week, divided by 30, about 6 months. So, you know, for some people, you would, without an issue, be able to look at someone and say, no, dude, this is like, you know, probably 3 to 6 months minimum until it's in a working condition. And what's funny is, to someone that's brand new to the markets, a beginner to the markets, and thinks that, you know, they've been told they can trade every single day on the one asset class, what do you think it does to their mental or to their ability to approach or for their future success or even their future belief in themselves when you tell them instantly a market that they've been looking at for years, Bitcoin USD, probably not good for bullishness until like 5-6 months. What do you think that does to them? You know? And then you learn very quickly why many people find themselves kind of out of the markets or deciding it's not worth it for them because, you know, they can't believe you. There's just no way. But it's like, add it up, guys. When was Bitcoin a good market? Can we all agree that Bitcoin was very clean from here until here? Can everyone agree with this? Does everyone agree that this was really clean? Very quickly. Okay. Let's look at what it took to get into that context. 10, 20, 50, everything's above at that high. No. The last time it happened was here. Guys, it was 2.5 years. It was a 2.5 years of doing nothing. Now, let me ask you an even better question. Is it more likely that this action right now does this or this? 1, 2. Right? Exactly. Someone said, why not sell? Go for it. You can sell. Nothing wrong with that. Because then you're below the 10, 20, 50. And probably in or around these areas here as it begins to move lower. You start watching the dailies if you're trading a 60-minute chart, right? Here we go. And again, same thing, right? It undercuts the 50, Undercuts the 50, starts a move, goes into stage 1. Yeah. Right? 60 minutes starts a move. Here's your faster base entry. Here's your anticipation on the higher low. Overall accumulation, in this case, on this side. Okay. Right? You can have faster base trades through these highs now, if they want to set up. They come down for the anticipation on the higher low, comes up, comes down, nothing really to do. Pauses. This is GBT. So this is a stock. So it's a little bit weirder. But like this looks nice. Why not? Comes down, nothing to do. I wait. I wait. It's a hard one. Okay, goes into new accumulation, comes up heavily, pauses, again, same thing. Take the MB long, same thing. Moves in, look for break even, nothing to do, move to break even. Probably wait a little bit for some strength. Nothing to do, nothing to do. Looks like it takes you out, and you're back at break even. Phenomenal. But yes, you would follow the exact same rules, dude. Let me go to the daily, or the weekly. You follow the exact same rules, nothing wrong with that. Mr. Not Perfect says, as an XRP holder, I can't sell. Listen, you can, I say it all the time. If you don't want to be a trader, you can do something else, or you can also be an investor. You can also do both if you really want. But if you buy and hold things, you're an investor. That's all you are. You see the foreseeable value in something in the future, and you're okay with having your money locked up for 2 to 5 to 10 years to make money in the future. That's fine. If you are willing to hold for 2 to 5 to 10 years, if that's what it takes, then go for it. You're a Warren Buffett kind of person, right? Warren Buffett will happily hold through close to anything, right? If he likes the company. He'll hold through a 50% drawdown, right? For whatever, 5 years, then he'll hold back to that same point for 10 years until it starts making a move, or 2 years, whatever it is. Yes, it's perfectly fine. Just be aware of what you are. Don't pretend like you're a trader if you're buying into XRP and hoping, right? Because there are some people that bought into XRP here, added on to more here, because they're like, oh wait, it's finally ready for a move, and now they have their money locked up. And if this thing never returns, which, you know, again, I don't believe in anything that isn't Bitcoin for the long run, personally, like as a personal human being. Oh, this was playback. Oh, well, there you go. That wasn't even live price. Yeah. So I don't believe in anything that's not Bitcoin. So the reality is, if like, I think most people that have a buy and hold in this thing are trapped for life, right? I think maybe it might make a squeeze again at some point to like 1.4, but right, like I don't think this is worth shit, which is fine. Because as a trader, I'm happy to trade this when it's good. Otherwise, I don't really have to touch much. Joey says, this might be a dumb question, but how would you have an edge with investing if there is no math involved? Or is there math involved? What do you mean? You find things that are doing well and you put money behind it. That's what Berkshire Hathaway does. They're worth like the most money in the world. That's Warren Buffett. You buy based on the product. You buy based on the foreseeable future of that product. John says, can you talk more about the context of your NAS trade? I mean, I pretty much did, didn't I? Prices above the 10 and 20. Prices stair-stepping higher through stage 1s and 2s. Went through stage 1, started at stage 2. I expected it to continue to stage 2. I traded it. John, it seems like your question's the same from last week and the week before, bro. So I'd reference those answers once again, bro. Like, because context time frame, like I said, over and over and over again, I'm mainly following the MAs. I care very little for everything else that's going on because it's too far separated from the entry time frame for it to matter. One move like this within a bearish model, and 3 weeks ago, you believe? Yeah, maybe 3 weeks ago as well. One stage 1, stage 2, or above the MAs, or multiple, while still remaining in a still bearish context, a still bearish market, a still distribution, whatever it is, can be hundreds of percents on your account. So Adamski says you don't pay attention on the 200 EMA while on context time frame. Do you see it on here? No, I don't have it on here right now. But looking at it, I'm assuming the 200 is probably somewhere like here. I have no idea. You can throw it on. There it is. Yeah, so it crossed the 200. Look at that. There it is. John says, I'm just confused why the model no longer matters and you wouldn't trade short into NAS. I would trade short into NAS around these areas, these areas, these areas, these areas. As I spoke about in the last few weeks. I think in the last few webinars, I spoke about how lower time frame bearish traders have had a field day with NAS. It's literally in the webinars, man. John, are you going through the webinars, bro? I think I literally had this discussion with everyone. I said, guys, the bearish traders, I even spoke about EVC. I said, if your EVC is much lower, you have phenomenal opportunity, and a lot of you did take advantage of the opportunity to trade this thing bearish. You screamed it into my ears, G. Yeah, that's what I thought. I'm just confused why the model no longer matters. The model doesn't matter because it is it's one filter for multiple filters that exist in the market. A market has multiple filters undergoing. Stage 1s and stage 2s, the moving averages, the actual models themselves, and BYs. Like, it doesn't matter that we're in a redistribution model here, because if price is delivering in 1s and 2s and surfing higher, you know, this could stay a redistribution all the way until price does this, gives you entries that make you 20R, then turns back over, re-breaks down to make a distribution, then starts to move lower, then comes up, gives you more moves in here if they're all bullish, and then continues a distribution model. And during all of this, you could have made, you know, 100% on the long side. So it's too far disconnected. Because at the same time, the 30-minute is in clear accumulation, right? Price began to move into this back and forth market, back and forth, accumulation, it started beautiful moves higher. Yes, I'm up to date with webinars. I'm hung up on models, I guess. I really like what you were doing around webinar 127 in context clues. Would you, this new bias reversal stuff goes against what you've been teaching in a while. I don't think so at all. I think I've always taught that you can be on both sides. I've taught a version where you can line up everything, which is fine. And I've spoken to you directly in the last few months, I believe, about how if you find that your trading goes best when everything on the context thing is green for EVC, then that is perfectly fine for you to be as a trader that follows that. I just found that I can make more money not doing that. I think you're, again, back to what I literally spoke about the last few weeks with you. I think, again, you're... how do I explain this? I'll just read what other people are saying. Depends on the time frame you're on. And then 1W says, no, bro. He said on the lower time frame, you can take it down because on a lower time frame, it'll be trending that direction. But on a higher time frame, it's not trending yet. Yep, that's also what I've said before. Again, John, if you find yourself making money in this, then make money in this. Follow that. That's perfectly fine. There's nothing wrong with that. All that means is that you're willing to give up, let's say, moments like these, which is fine. You don't have to trade this, okay? You can wait for this to roll over and become distribution, go into distribution, and then follow distribution. Or you can also simultaneously wait for this to play out, break the top, whatever, maybe break the bottom, break the top, and become accumulation, and then be accumulation across everything, and then follow accumulation. I'm just aware that because, and with more testing on entry and validation timeframes, these moments can still create phenomenal opportunities, and I'm willing to put my money behind them. That's it. I said this like over and over again to you, I'm pretty sure. So listen, if you, like I said even at the beginning of this webinar today, one of the main goals of the screener right now with the developing team that we have and that we're trying to develop is not to just focus on these filters here. the filters are to have the models, but to also have filters along the lines of MAs, where the price is in regards to the MAs, if it's been above or below on the E, the V, or the C, right? I'm not using this as the only in one filter to give me everything, which is why, even from the very beginning, I've said that as good as a screener can be in pinpointing, let's say, one good market that you can follow right now because it's all green, you need to be aware that just because some things show red does not mean they're bad markets. I know that I've said this before because I remember teaching it, because I know that I've taught you not to fully diverge all your belief and trend-based ability to follow something onto the screener, right? I've always said this can show something that's overall bullish and could be bullish for a while, so it might be an easy market to follow, but there are other factors that exist that determine if something is worth following or not. John, I don't understand why you are confused, but making really good results. Oh yeah, that goes into it without even a question, right? If you're doing well for yourself, or if you're testing and showing you to make money across doing one thing, it doesn't matter what I or someone else is doing. Just because I understand this is a moment that I can trade, doesn't mean you need to be trading it. If you've been simply waiting for this to become an accumulation on a higher time frame, that's fine, dude. There's nothing wrong with that. Because the reality is, if this market's going to be bullish, and the 5 hour becomes an accumulation, then it's going to be an accumulation for a while. And during this time, when this happens, if it happens, which could be in a few months because of how markets operate, yes, then you're going to have 30-minute and 1 minute and 5 minutes all line up for bullishness at some point, so you can follow them. I'm just aware that the model of the context time frame is not necessarily everything. I've noticed with more and more trades, especially with my own trades, that could be in a bearish model despite being in a fucking disgustingly bullish market, that I don't necessarily have to focus on the model. I can focus on the quote-unquote model of the moving averages. Because in this case, from a market that was fully under everything, randomly waking up over the span of 10 hours, being above all 10, 20s, and 50s sloping directly up, I know that's a market telling me something. And I know that's going to take at least 6 more MBs before this decides that it might be an accumulation. So again, as per, I don't even know how many other webinars, I've said time and time again that sometimes a big move can also signal the change of the model. Sometimes a redistribution is actually an accumulation. This happened on gold, and I remember this because I taught it. Because right here, this was still a redistribution, wasn't it? There it is. This was still a redistribution. At this point, we were in full bullish mode on gold. Because again, look at even in this case, look at what the MAs are doing. Look at it based on what I taught today. Prices are above, price moves back to a rising 50 or just undercuts it, rising 50 or just undercuts it. It's likely going to maintain bullishness. It's likely going to maintain bullishness. Undercuts, doesn't even get to the 50, it's likely going to maintain bullishness. Undercuts, likely going to maintain at the 50. Now it's going to get probably accumulated at the 50 again. Maintain bullishness. To the 50, maintain bullishness. To the 50, maintain bullishness. Right? John says, sometimes I get good results, other times I find myself getting caught in chop, so not consistent. Okay. Let me go up. I think I missed a few things. See what's going on. I'm actually going to go up. No, I'm not going to go up too much. Kind of skipped a lot of messages today, huh? Listen, guys, I'm going to start reading. I'll tell you from what time I'll start reading. So if I didn't answer or like see your message or something, you can copy paste it. I'll start reading from around 11:48 a.m. Alex says, I don't know. Sometimes I feel like completely wrong. I don't remember what that was for, but that's fine. Sylvia says, how do you partial on this EVC? So for my general partialing, right, especially on like faster moves, what I'm almost always trying to do is I'm trying to partial into strength and then close into weakness. That's really it. So like for some of these quicker moves, right, as this happened, I partialed directly into the strength, right? I partialed into this initial candle instantly. This was insane, right? Where was it? There we go. This was insane. Like this went to 4RR within seconds, right? Or within 5 minutes. So I took a partial out of it. And the next candle gapped up and it started putting in huge bullishness. And then as it failed the bullishness, as this candle here became a big green candle into a big wick, I closed another partial right here. So again, I wasn't sure. This could have done this, right? It could have gone candle, 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 and then I would have closed like here. But it didn't do that, right? Instead, it made a candle and then started failing. So again, I closed into weakness. So I closed some into weakness. And the rest, I moved directly below this up candle. Because to me, if price refails back down here, the reality is it's going to chop and then make a new move that I can trade, or it's just going to fail and start a new accumulation, which it did. So I closed the rest right there. So basically, all my profit taking happened right there in this market, right? And if you look at where that is on a 30-minute even, right? Take a look at where that happened. It happened after one candle in this case, right? Stage 2, stage 1, stage 2 started. I was willing to manage into strength, but strength did not come. So I managed into initial strength, weakness, and then closed into weakness. So my general rules, if you are to write them out, right, is, well, manage to BE, right? Partial into strength, then partial / close into weakness. That's it. This is my entire rule. And for the most part, I want this all to at least be over more than or equal to 1.5 / 2RR when I take my initial partials, right? And this kind of depends a lot on, you know, what my general statistics are, right? But if I know in general, based on this, right, that what I'm doing is resulting in around a 80% break-even rate, right, 20% loss rate at this point because of just how it's been going for some reason, even if this increases over time, then I know that as long as I'm taking even like 1 RR out of each trade, I'll be profitable at the moment, right? Because of this, because of these statistics. So, you know, in average, if I can follow just this on the moves that I'm taking, I'm gonna make money no matter what. And because my rules are a little bit more loose in regards to I want to partial into strength or close into weakness, I can allow myself to trail into more and more weakness as it goes further and further. So instead of just being at 1.5 or 2, all of a sudden some winners become worth crazy amounts. Like you can see my average win is 5 RR, right? Because sometimes just this follow-up of management leads to 7R gainers, 7R gainers, 14R gainers, 26R gainers, right? This was the gold trade. I mean, sorry, not gold, sorry, Bitcoin trade, right? Where this trade just went and went and went, and the partial into strength, then the partial into some weakness, all resulted in just a move that then finally got weaknessed out over here. Right? That's what I'm trying to do as a trader. As a trader, I just want to have general principles that are already profitable, and then the simple rules that I have of let's say trend, which is basically this. This is honestly all my rules are only there to gain me even more money. So now what's cool is I can work on some of my trades to make more out of them, right? Because if you pay attention again over and over and over again, if I pay attention to my trades, this trade went 10R. I took about 6R or 5R out of it with my rules. That's pretty good. But if this trade went 30R and I took out 6R of it, I'm trying to ask myself, what can I be doing to maintain these general levels of consistency while also taking more money out of the insane winners? And that's how I improve and evolve my system over time and make it a little bit better, a little bit better, a little bit better, right? I learn how to better partial into strength, and I learn how to better close into weakness. This is all I do. This is literally my entire rules for management, right? They're not complex, but they require you to, you know, be there, like be smart about what you're about to fucking do. Don't be a complete idiot. theoretically, I could close all my trades at 2RR and probably make money, right? The way I think about this is like, this is why I talk about fixed systems being kind of good. If I simply went and replaced all gainers with 2R, okay? Doo-doo-doo. I'm doing everything over 2R. I'm making it 2R, just so you guys know right now. Because I want to make this really apparent to some people. Like, I really want this to make sense, right? Because like, so, okay. So you need to understand that at 2R TPs only, nothing else, I'm profitable, right? So I already have like a baseline level that I guarantee I'm gonna make money with. That's it. I have to do nothing more than take 2R TPs and I'll make money. So now if I can improve my ability to hold winners beyond, let's say, a 2R mark, or take partials that get me to 2R, but let me take more, what's gonna happen inherently to my system? What's gonna happen? I'll make money. I'll make a ton more money, right? Just keep in mind, like at 2R TPs, this is at a 30% compounded ROI, 30%. At non-2R TPs, this is at 140%, right? I increase my earning potential over X amount of time by 110% by adding in these rules. So really let that sink in, because once you realize you're profitable with a minimum baseline, well, you can improve it, right? Okay. Yes. Sometimes they do just fuck off to the top. Very well said, Alex. Yes, you're Alex K. Adamski says, how do you separate a false entry MB from a good entry MB while on stage 1? You look at the MAs. That's one of the best things that I've personally noticed. You look at and then you look at where those MBs are forming in regards to the MAs. That's one of the best things I've done. And you've also increased your, how well you manage break-evens. Anthony says, would you pass a trade if the MA invalidation are a little horizontal and price goes sideways? I need to see an example, but I don't know. Alex, I mean that I often doubt on setup despite approximately 700 trades executed behind. Feels like I stopped understanding. Then next day it looks clear again. Yep, this will happen in trading. Perfectly fine. You will have days and weeks where everything makes sense because everything's in order, everything's moving kind of the way it should. The moves that you're looking at end up moving, and when they end up moving, you still take some break even, some losses, but you take good wins and you're like, damn, I'm doing it right. And other times, you look for something, it'll fail. You look for something, it'll fail. You'll look for something, you'll get into a trade, it'll fail, and you'll take a loss. You'll get to something, a loss. Break even, you'll look at something, it'll fail. And you start to think that you don't know what the fuck you're doing. And that's fine, that's very normal. All you have to remember is that if you're looking for trends and you're understanding the truth about trends, it's that trends are only there like X amount of time. And that's really it. You need to get used to it, and you will get used to it. So start forward testing and start realizing your actual trades, right? What I've always said that people should do is, because again, this is free, but you can do it with anything. Go sign up for the Mentifex competitions over and over and over again. It's a free account, and you can get multiple. You can sign up multiple times. Get that account, and just start testing shit. Now, if you're not on, if you know, this is only for, what is it? For currencies and some indices or whatever. So if you want to do it for futures, you can go find your own like demo broker or something else. You can do it with, you can do it with many things. But in some way, you should start forwarding. You can even do it through the paper trading thing. Show up and start doing it, because you will feel that stuff. You're completely correct, and you'll feel it over and over and over again, right? 7K drawdown, no, it's perfectly fine. Metafor test that often. Don't do numbers, do percentage. Numbers don't matter. I don't care if someone lost 500K. I don't care if someone lost $50. If the guy that lost 500K lost 2% on his account because he's following rules, and the guy that lost 50 bucks lost 50% of his account because he has a $100 account, those are very different things, right? Don't think in money. Thinking in money is completely worthless. Unless you're thinking about what the future holds based on your actual setups. The good old 2050 SMA. Yep, 2050 SMA creates pretty nice entries too. Right? S off. Right? So like, I don't know, I don't know if it creates clean ones on these, but we'll take a look. 2050, yeah, I mean, so like maybe this one through the high here, this one through this high here, this one through this high here. This one that I missed, but again, a lot of them might line up and will line up, right? This was a great trade off the 2050. And this one actually ended up being an insane mover. Right, and again, like you can go over, like, so the guy that asked a little bit about management, you can go over and ask yourself how you would manage this and how you would play it, right? Like, I know the general of what I would do here, right? I know that I'm break even on this candle, the second one, or the first one. Very likely. And I know either one results in a winner. That's a starting point. 2 is I know I'm likely partialing my first partial into the top of this candle or into the weakness of this candle. That's going to be my first partial almost all the time. I know as this begins to go that I'm starting to move a partial probably behind some of these lows for a second partial because I want to get out on weakness. But then as this strength comes in, I know that I'm taking another partial either up here or up here into weakness. And then I know that I'm likely closing this entire trade by here at the latest and by like here-ish at the earliest. Right? I know in general what this overall trade is going to look like. I don't know exactly what it'll look like perfectly because again, the rules that I personally have to the management are not like this perfect little exact close that's going to make you the most money, because that's not what actually happens in the markets. Markets are unique. Each setup is a little bit unique in itself. Each setup is going to respect a given rule a little bit better or worse than another. Some are going to respect the maze a lot better. Some are going to respect just big candles a lot better. Some are going to do both at the same time, and some are going to create such crazy moves that it makes the most sense to just partial into them and close into some strength, right? So that's just kind of how I approach thinking about actual markets and trades and everything else on top of that, right? But the actual setups every single time are the same. And theoretically, I could go for 2RR every single time and make money. 2RR, 3RR, which is a very important thing to understand, right? Because when you understand that, then you stop worrying about that and you start focusing more on the actual management of the trade itself when it does start moving. Yes, this is a trade out of the overall accumulation. All right, it starts its move. You waited a bit. I like the waiting. And then you trade it into this. Yeah, looks fine. There's this one too. Yeah. And these happened over here. And that's your validation time frame. Yeah, there you go, right? Perfect. Right, validation time frame starts a move. Stage 1 into 2. Stage 1 into 2. Stage 1, right? And then out of the stage 1 or just over the stage 1 or even the overall stage 1, however you want to draw it, you found your entry and you took that thing higher. And then based on how you got positioned on this, you either stayed in it or you got stopped out by around, some of these points here. That's it. Beautiful. Then it came down. Same rule as per the guy that asked about the 50 EMA, right? On the validation, because I don't use it on context or anything, but on validation, right? Flushes to the 50 or flushes just to the 50. Starts at stage 2, stage 1, stage 2, stage 1, stage 2, and then you probably end up waiting again, flushes to the 50. Now you again would wait, right? Start to move, stage 1, stage 2, stage 1, and then there's going to be new opportunities. And that's how opportunities are built. That's it. That's how they're built over and over and over again. When a market's actually trending, and when it's not, well, you guys know what happens, right? Adamski says, for buys, is your context time frame must be above the 50? No, I don't look at that necessarily, but What I do know is that on the validation, it's almost always above the 50, or for the validation to continue holding trend, it maintains itself at the flushes of the 50, or just to the 50, or just under, and then continues. And that's a rule that you can write down and keep in mind. I'm actually gonna take a little note on that, because it'll probably be important to cover it in the portal for some people, because not everyone shows up to webinars, even though you should. And this webinar one day will be lost in the depths of the Mentafex library, right? Flush, recover, validation, time frame. To continue, move. All right, so like that's something to take a note on. I have the little notepad here, a little real notebook next to me. But yeah, just something to keep in mind, because that is what happens. It's what tends to happen with price, and all we can do is just follow what price tells us. What is this? Would this for you be the same type of entry due to the fact that the supply line is kind of not perfect? So I spoke about stage 1, stage 2 today. Looks fine. We got that. John says, can you tell me more about the... Oh, we did that. 1W said, had to BRB, now I'm back. What up? Good. What up, buddy? Happy to have you here. 10, 20, 50 are your main ones. Yeah, they've always been my main ones. I played around with the 200 here and there. Sometimes I'd follow the rule of having it over the 200, but that was good for when everything's lined up. So like that's more along the lines of something that maybe John would follow, right? Where he likes to have everything, including models, lined up. That could work for him, where all the MAs start kind of sloping up, the 200's above, everything's kind of moving higher. Maybe a price undercuts 50 and he gets in. Perfectly fine, right? There's multiple ways to put together a few rules. Like I think I spoke about the UJ trade, and I based it on just the understanding of the 200 flush outs and then continuations. 200 flush outs and potential continuations. Well, right now it does not look like we're anywhere near that kind of continuation, but yeah, we're just under everything. But if you're one of those traders, you'd be waiting now for this thing to get above 250 on the 4 hour, right? So like if you were a bullish trader, you'd be waiting for this to happen. Like this would be more something along the lines of what John might actually follow, right? Because you like to see alignment across everything. So you'd probably be waiting for that flush out to now be met with a new accumulation price to get above all of these, the 50 come up. Then as price flushes down on the 4 hour or the daily, your hourlies or your 60 minutes or your 30 minutes will start to produce entries in or around these points here through the overall MBs. And you'd be able to play the larger term trends that do play out, right? Because again, if you're following a system where you're looking for everything to close to align, the reality is you're looking to wait for the bigger trend moments that are going to result in kind of the larger moves, which is fine. But that means that a lot of the other time, well, there's going to be nothing to do. Like you're looking for the moves along the lines of something like this, and you get to hold this out, or this, and you get to hold this out, or this, and you get to hold that out, this out, etc. Roberto says, hey Ment, I got late to the webinar. We'll have to rewatch. Thanks as usual. Question, what will be your recommendation to a person that makes a lot of what I would call practical mistakes regarding his trades on live, such as entering wrong size of contracts, closing where it shouldn't, opening position where it shouldn't, and some others? Very, very simple, Roberto. You go to the trading panel or whatever, you get on a paper trading account, and you follow your rules, and you execute proper contract sizes for 3 months straight. If you make a single mistake, you reset the 3 months. Very soon, you will hate resetting 3 months every single time, so you'll never make a mistake again. It's very simple. A lot of people won't do it for some reason, but it's as simple as that. The reality is if you can go 3 months forward testing properly, following proper rules, not breaking rules, and making the correct practical choices without the mistakes, then you're gonna be fine. If you can't do that, and you punish yourself properly, because no one's there to do it for you, you won't make those mistakes again because you'll get sick. of having to reset 3 months at a time. Would you consider shorts on NAS during this huge flush out if you are a higher time frame trader? If so, where would these trades be? On NAS, higher time frame shorts. Yes, but they're not available right now, at all right now, because we're not in a bearish market. This is still a bullish market. This just undercut the 50 and it actually just reclaimed, so this is still bullish. If you are going to be bearish on this thing and it's going to become bearish, then these flush outs will lead to these to start new bearish moves that will start creating stage ones, that will start stage twos, that will start stage ones and start stage twos, and that's where you would trade the short side. But right now there's nothing to trade on the short side. All right. You follow the exact same rules, but on the opposite side of the market. This is not a bearish market. This is a bearish move. This is still a bullish market. Hi, would you please give some examples of the anticipation rule? While testing, I often take trades too early and then it seems like I have to wait for a second anticipation rule. Hope this makes sense. If you're finding that, then always wait for the second one, right? If that's what you're seeing over and over again. The example is a very general one. It's taught in the portal. And again, the purpose of teaching it is actually to instill the idea of accumulation or reaccumulation in your mind. Because most stage ones off of validation timeframes end up being those rules on an entry time frame. And then they start to move. So for instance, open up a chart. Stop looking at live markets. Go look at prior markets, stage 2, stage 1. I know in here is going to be the anticipation of the higher low rule before continuations. I just know it because that's what happens with prices. So as you go in, you look at the 60-minute, that's exactly what you're going to see. Reaccumulation or anticipation of the higher low rule on some level or on multiple levels, and then price starts the MB moves to the top side. That's it. Don't complicate the rule. Second question meant, what will you recommend to someone that has a hard time watching his system playing live? Meaning, for example, it's not the same as waiting for price to reach 1 to 10 in live, as being able to, because it reaches 1 to 9, then we do it in replay mode. The same thing I just said. I say time and time again that if you've done the proper testing and you have the proper data for a profitable system, you shouldn't be live. You should be on a forward test for a minimum of 3 months. Very simple, but nobody does it. Yeah, you have to get used to it. And most importantly, when you trade a lower time frame, the lower you go on your entry time frame, the faster you have to be, the more ability you have to have with being okay with prices doing what they do because you're there watching them. You got to follow your rules. That's it. Adel, can you please quickly explain pros and cons of the 200? Just wondering what made you take it off. There's not really huge pros and cons. I just wanted less noise on my charts. And because, like, same thing that goes with the earlier question of using models on a much higher context time frame. The reality is I just stay out of, it keeps me out of a lot of moves that theoretically I could have traded with no issue. That's really it. I don't try, like, there's nothing more to it. Like, I don't even know if I go to the 30-minute here on something that I just traded CING. All right, when I traded this thing, like, this probably got over the 200 right around here. I'm guessing, I don't know, but probably around here got over the 200, which I guess would have lined up anyway. So like the things that I'm trading are lining up already, I'm guessing, right? Yeah, like this lined up, GoVex, the thing that I traded, right? This already lined up a while back. So the reality is the stuff that ends up lining up for me to trade, the 200's already taken care of, honestly. Like Bitcoin, like I already know I'm not trading this thing for a while, right? I know I'm not going to trade it because I expect it to be bearish now on the whatever, right? So as I expect it to be bearish, it just gets under the 200. Like the price already does the job for me. right? Maybe in the future when you have the screener and you have access to, you know, using something to filter with the 200, you can use it. But I don't see the purpose of having it on here because everything I'm doing is already taking it into account, right? This trade that I took, look where it was in respect to the 200. Like, it was, there's nothing really to consider there. There's nothing to add. Look where this trade was, that was the loss, right? There's nothing to add. There's nothing to do. It doesn't play any extra, it doesn't have an effect on what I'm actually doing. When this price has failed here, you know, I'm not thinking about longs on this thing since where? Since here. I haven't thought about longs on this thing. So what is this doing for me in regards to thinking about longs or shorts? Nothing. And the time that I'm thinking about shorts on this, well, it's already under it. So I have no necessity for it, right? So there, I'm just gonna keep it off my chart because I want less things on my chart if I can have less, right? I just want the important stuff on there. Why does it say redis if it's clearly respecting off MB cluster off MB2B? Christian, because the indicator is code and the human mind is different. And you can't code everything. Which is why I've always said don't rely on the indicator for the actual overall directions and everything. Just look at the action, but let the indicator act as a confluence to like kind of overall time frames. Anton, what broker do you use for your stock trading? Charles Schwab. Still, nothing has changed. For a few years now, nothing has changed on the stock side. I always try and keep my raw eyeball check analysis over the screener, just like that gold example, because MB clusters off WNB MB2 is clear bullishness to me. Yep. Almond says, you say trading trade 1 and 2 is wrong because they're different. I didn't say it's wrong. I said for an okay, we're gonna repeat what we said earlier, okay? Before I even read the rest of the question, I said for an intermediate trader that is learning and has found edge with one kind of trade, like the trade coming out of, let's say, an anticipation area with an MB off the first setup within that area, off of that initial stage 1, is different than the trade that takes place higher up, let's say, or on the momentum. They're two different trades. So therefore, in an example of an intermediate trader seeing those happen, he would be wrong to take the higher entry because it's not following his rules. So now let me finish your question. You say trading trade 1 and trade 2 is wrong because they're different. So the system can be mechanical where I have 50 plus mechanical rules and every trade is the same, or it doesn't work like this and there has to be subjective about something. If so, about what? What do you mean? So the system can be mechanical. Let's try to draw this out or try to understand your question. So the system can be mechanical, where I have 50 plus mechanical rules and every trade is the same. Okay, this is not what I've ever taught or said. I have always said that each setup itself is a snowflake, right? This is one of my biggest teaching points. Each setup is a snowflake in that there are similarities as to what they are and what the setup is, but they are unique in the fact that it's a snowflake and that there's no one necessary particular exact thing that's always the same. That's true about markets. However, you can have differences that are easier to spot. For instance, trading a trade here is different than trading a trade here, no matter how many mechanical rules you have. Yes, both of them had touched a 10 EMA. Wow, amazing. Okay, that doesn't matter. Both of them had at least 5 candles. Wow, at least 5 candles. Okay, great, amazing. Those mechanical rules don't matter here because there are differences as to where the price and what kind of entry is happening. This is happening, if you are to give it rules, as price moves away from a larger stage 1, right? And from a base that has already occurred. This setup here is happening after a flush out to just over the 50 and the first time that it's met itself above the 10 and 20. So as a result, where these two are happening, if this is a validation time frame, are different. So the trades that you take on them are theoretically different. Now within them, the trades that are available could be similar, okay? What I mean by that is, for instance, if we're on a 60-minute chart, this entry as an MB, okay? Actually, here, this is better. If you were to enter this MB here, where prices slope under the 10, 20, and 50, and then build an MB, that's the same as this entry here. These two entry types are the exact same and can be same because of certain mechanical rules behind them. However, in this case, a follow-up entry, if we look at the bottom left, this entry here, which I'll make red so it's easier to see and make it darker, this entry here is not one that occurs here. And you cannot say that these two entries are similar because the type of setup are very different, even though they're the same move as regards to this is a double MB, just faster. This is a double MB, but happens on top of each other. These are different entry types. This one, right, is different to the entry here in regards to multiple mechanical differences too. The size of them, how they went sideways, what the prior move to them was, et cetera, et cetera, et cetera. Okay, so again, I honestly don't even understand the question necessarily. Because I tried to discuss in the last few webinars, the main point has been to discuss the fact that two entries, even though they might be boxes, could be different trade types, and you need to be aware of that because if you're trading multiple trade types and you're wondering where you're going wrong, that's one of the reasons or areas you might be going wrong. That's all I've tried to explain. So Almond, try to phrase this better, try to explain the question so I can try to answer, but again, I don't really understand what you mean by this. Because you're saying, I didn't say it's different or wrong necessarily, right? I said that an intermediate trader trading, for instance, again, similarly, an intermediate trader who is used to trading moves like this, okay, is going to lose money if they start to think that this move here, because it's a double MB, right? 1, 2, is the same as trading this move right here. 1, 2. A trader that trades this move here or treats them as same moves as this move here is going to lose money over time and as a result is wrong. Yes, that is correct. That's all I meant. As says, I just finished backtesting 2,100 trades on this system. However, should I be worried about the 0% risk of ruin? A couple of refinements have been done to the system along the way, but other than that, no. Well, you need a 0% risk of ruin. That's good. I also don't have access. Is there a discount code to MentFX funding? So listen, I try to keep the funding separate fully from the mentorship. So you can go and check out the Instagram of Ment Funding or like the free Discord or whatever. But yeah, I think there's a discount right now. Christian says, is this a good example of how you'd enter with EVC based on context being on or under 10 and 20? So 3 minute is your entry, I guess. Okay. Sure. And this is your validation, I suppose. I mean, sure. I mean, it's under the 10 and 20. It's moving in stage 1, stage 2 down. And then starting a potential new move. I think this is too high up, though. No, I'd probably trade down here. This looks like it's still a potentially bullish market. But again, it depends on where we are on the context as well. But no, I don't think I would trade this personally. But that does not make it wrong. I just would not trade something like this here. Also, as a side note, just sharing for the first time my experience, what it's like to be a full-time trader, says Roberto. I got 2 weeks vacation for my work. I work as a financial lawyer for a hedge fund. And it's just as you said, meaning in a lower time frame system, you have to expend a lot of time on the screen. Yes. Sometimes you go to take coffee and the move has happened. Yes. Anyhow, again, is totally different than live environments and the testing scenarios. Yes. Not that it's a limiting factor, but sure, it's something to get used to. Yes, all of that is true. It definitely is not a limiting factor because that's how lower time frames are and you have to be aware of that. But it definitely takes time to get used to. Because if you're back testing a lot of these lower time frame stuff, well, when it's live, you you're going to be sitting there doing nothing. You need to have something to preoccupy you, theoretically, right? You can be reading a book, you can be listening to a podcast, you could be playing video games. I don't give a shit. But the reality is, it's a lot more waiting around at that point, right? Like, you have to realize, for me to take the trades I took, right, this is a few hours of work, right? Well, of work, right? It is. That's what it requires. This is a move where I show up around, I think around 8:30 a.m.-ish, because that's usually when I'm around on, and I see this move, and I'm like, okay, this is something to potentially keep an eye on the day. I'll respond to it. I'll look at it as it opens up. As it opens, I'm watching this, right? This is 5, 10, 15, 20, 25, and about 2 hours and 50 minutes in, the first setup happens. And this setup could have been the setup that ends up being the runner of the day, and there's nothing else for me to do. And I might miss it, but no, it ends up being a break even. Then 15 minutes later, I'm taking another trade. Then 30 minutes to an hour later, I'm taking another trade that I now have to manage over the course of about 30 minutes, right? And that's me showing up on that day and just sitting there basically doing that. That's what it requires of you if you want to trade some lowers. Now, luckily, I'm on the computer a lot. So if I'm looking at stuff, if stuff is popping up, I'm looking at it, I'm following it. If it gives me a setup, I'm taking it. Because I know an advantage of lower time frames is that you can theoretically make a lot more money quicker. Okay? Because when things move and when things set up, and you're there and you catch them, the only thing that's left is management. And on the same risk that you might be able to take on a higher, it's now going to play out, whether it be a loss, a break even, or a win, in 1/50th of the time, right? King Cole says, my initial full TP was 1 to 3. But after collecting over 1,500 backtested trades on my initial management, I noticed that I was getting a lot of runners because of where I was placing myself in context. Only 75-ish trades, and I've already 3x what I would be on in terms of RR with my other management. Exactly, right? And what's cool is the reason you're probably doing a lot better for yourself now is because you set that baseline. You know that if you took 1 to 3s, you're going to be profitable no matter what. That's a guarantee now. Done. So now you know that if you just simply milk a way to get 1 to 3 somewhat consistently, but let the rest go, that's it. You've just potentially increased your average by double, right? That's exactly what you should be doing. On the GBTC trade, how many partials did you take off, if you can remember? 3. I believe it was 3 partials total. That's all I took. I think it was off the entry. That was, where was it? The entry was in here, right? Entry was somewhere in here. The first partial, I don't remember exactly, but I think it was around here. Or here. It was one of these. First partial, I think. Then second partial, I don't even remember. Let me go to the 4 hour. I don't remember now. I mean, if I was to go over my rules right now, specifically, right, my first partial would probably be around here. My second partial would probably be around here or here. Okay, and my third partial would be, or my close would be either through this MB low, or, if for some reason somehow you held on, maybe here, right here, through this candle, because just big candle, maybe even up here if you're really quick with it. Yeah, there's a few ways to approach it, but that would probably be the general ways I'd play it. But yeah, there was 3. It's usually 3. I usually won't have more than 3 total closes or partials or whatever as it goes, right? Make sure this is all, yeah, we're good. Yeah, in general, it's almost always 3 total management clicks, or 2. It's 2 or 3. It's always a partial into close, or it's partial into close. And the first partial is almost always on and into strength. And the other 2 are almost always into weakness or loss of strength. Kyle says, might be slightly off topic, but after going through the portal, I had a thought that line break charts or Renko charts might be easier to see stage 1 and stage 2. Go for it. Sail the seas. I don't do it. Eurocat thoughts, seeing a nice stage 1 right now on the 30-minute validation time frame. Over 10 and 20, potentially in stage 2. Moving in somewhat accumulation. Comes down, stage 1, stage 2, yeah. You know, it's building like kind of this area through which it can move higher. Overall, you have accumulation. MBs are building from that accumulation. Yeah, I mean, if you get impulse or strength out of this, you can definitely get trades. If you're not already in it through the MBs, then yeah, you can get faster paced ones later this week, or start having a move, flush out into the deeper setups, right? Maybe another flush, and then start your moves. Whoops, sorry about that. Yeah, it looks fine. Looks good. I think this is green on the screener as well, right? I'm assuming. Yeah. So yeah, this is maybe like a John kind of pair, right? If anything. Should be CAD. Yeah, I can't wait till we have other what's it called? Other filters applied to this, because those are just going to completely transform, for me at least, my ability to filter markets. But also likely help you guys with filtering markets as well. It's gonna be really nice. Let me see if I can find something here. No, I can't find it. It's fine. It is fine. Yeah, don't worry about it. Not needed. Easy says this, is your commission cost correct trading the 1 minute? I think you'd have a higher commission than 0.01 per 10 pips. I'm not sure, but I think you can't even trade 1 mil on 1 min due to commissions and slippage. Just reduce risk. Yeah. I mean, you wouldn't be able to get to these values, of course, with 1 minute entries for sure. You know? But yeah, profitable system. Over time. I'm waiting for stage 1 to start on GU for buys. Please, what do you think? Is it too extended? Yeah, I mean, I had good trades all week. Through these 1s and 2s, and now it's in a 1, so might need a little bit of time, but yeah, looks good for a potential stage 2. Sure. It's definitely on the bullish side. 30 minutes delivering its 1 and 2. I mean, I hope you traded it during this week. There was no reason not to, right? These were the trades that you should be on, of course. And throughout that time, you had, yeah, your anticipations into the MB moves. Not really clear, like momentum-based moves. I don't really see one. Maybe here. Maybe up here and here. And then your move came from that, and now we're just sideways. So yeah, maybe a flush out, larger term flush out into something to keep going. Kind of as per a few Webbies ago and through a few Webbies, like, I don't know, this is one of those markets where, like, you know, at the latest, you should have started trading here. And then these were phenomenal. Like this should have been your profit right here. Now you should be positioned and either waiting for tiny little scalps if you really want to take them on something like GU, which I don't think you should usually be scalping or whatever, or taking small trades off of, momentum-based trades off of, just because, you know, you're paying a lot more usually in commissions and stuff for stuff like this. But yeah, I mean, this should be profit right here, and now you're waiting for it to do whatever. Lucas says, it makes sense now, thank you. It links with what you were saying to John earlier. Good. Good. What did Alex draw here? I don't see the time, but yeah. Yep. Christian says, if you want to be able to trade lower trades like that example you've shown and higher momentum-based trades, is it better to test both at the same time in New Journal to see if it has edge? Or if you're more so used to lower type trades closer to SSC, just stick to that because you don't want to get close to trading any and everything. Same answer as always. If you're profitable with one, you can add another. If you're profitable with the other, you can add the other, etc., etc., etc. If you're not profitable or can't be profitable trading like the trade out of here, you're going to be a lot less profitable if you're trying to trade that, then this, then this, then this, and applying multiple rules or approaches or understandings to the trades themselves. Okay, same answer as always, Christian. Don't add things if you don't know how to trade one. Trading multiple things will not make your one trade that you can't trade better. That's not how it works. Otherwise, there's no point to trade the other one. If you only find yourself making money with stuff like this, then don't trade the ones in here. Was this a potential other entry on CING? Oh, this one here? Maybe, yeah. It was market open. I don't usually like trading right into market open. They're usually a lot more volatile, a lot more, it's like red news almost. Like usually trading these just results in chop. But yes. What was it doing there is the best question, you know? Like how to actually look. Yeah, I mean, it's fine. I don't like that it's just like in this huge range with this tiny buildup here. I probably would have not done it. Because I was there at open. I just skipped it, you know, short-term stage one. I mean, it could work, right? Like through whatever is here. For sure, as a mini stage one. But yeah, I probably would have skipped it myself. It does seem like you'd break even on it, at least. Yeah, it would be a break even for sure. Whether it be on this candle, you broke even right there, or on this candle as it began to go, you break even. Or even partial, bro. Like, wait, isn't this like 1 to 2 at least? Yeah, it's 1 to 2.3. 1 to 2. Yeah, you probably get a partial even on it. Yeah, I would not trade it. It's just a harder one. If it was a higher time from stock, maybe, but nah, I don't like it that much. And then it started building up nicer. Yeah, I like this a lot more. Yeah, it's not bad. I mean, like if you traded it, I'm not against it. I would just wait a little bit, which is what I did. I waited and then I let this thing set up, and then I started taking the MBs out of the new switch to longs. Altmex says, gotta fly. Thanks for the webby. Safe flight if you're actually flying. Otherwise, I'll see you, bro. Thanks for being here. Yvonne says EBC equals 1 minute, 5 minute, 60 minute. During Thursday, run on US 100. Do you think the buy stops of 1014 candle high and 1105 are fine trades for momentum trades? You tell me, brother. What do you think? Are they? How'd they play out? What'd you do on them? How would following the rules on them go? 1014 on the 1 minute. Well, buy stopping that high doesn't make sense, but buy stopping like after this happened, sure. Like that high is fine. Yeah, it looks fine. What's the 5 doing? Stage 1, stage 2, stage 1, stage 2, yeah. Yeah, can make a little move, why not? And this is in a clear stage 2. Just moving out of a bigger stage 1. Yeah, sure, why not? Flushes out, starts making this little MB here. Harder to trade that one, but then this one is, yeah, this one looks really good. Through that high. Stop here or here, it's fine. Break even around there on that candle. Yeah, it'd probably be a break even for me. Yeah. And then it just slowly goes up. Yeah, it'd probably be a break even for me and nothing more. Yeah, this is... Well, this one's setting up quite nicely over here, too. Oh, then it fails, never mind. Maybe this high, but this is... I mean, it anticipates the higher low, starts building accumulation. What's the 5-minute doing? Stage 1, stage 2, stage 1, stage 2. Yeah, maybe even something up here as a mini trade. This guy right here. As a loss, there you go. Fails back down. There you go. Yeah, and it just fucks around. Doesn't put in momentum, puts in some nice momentum, and then fails again. Yeah, maybe this one down here is fine. I'd probably be break even on it if I took it, if I traded it. This is a great 1 minute right here. This later one, then you get the anticipated higher low. You get the little MBs in here. Those work out nicely. And then, honestly, this lines up perfectly with the 5-minute one I took as well. This is a great 1 minute one here, too. I think this is the better trade. Then it goes, flushes out, builds this mini base. Yeah, this is okay. This is just preference. And then just slowly dwindles higher. Yeah, sure. Off topic, but are you going to put some new content on the portal this week? I hope so. Almond says, I can decide I want to be above the 10 EMA on validation time frame, but I couldn't say I want MA to be exactly 38 degrees because price doesn't move like that, but moves in snowflakes. You can do whatever degrees and slope you want, man. Yeah, that's fine. Would you say all those are snowflakes or not? Sure. It depends. Do you find that you make the same amount of money regardless of which one of these set up? Or do you find that you only make money when you usually see one of these, right? In that case, this is the thing you want to focus on and they're not snowflakes, right? Amazing webinar as always. I'll see you, Evaldis. Appreciate you, man. Oscar, NEE, 30-minute entry. Hour. It's kind of choppy trash now. MB. Maybe down here, sure. Get your flush, start making MBs. This MB's kind of nice right here. And then now if it can set up a little sideways, you might be able to get another trade inside of there too. Sure. Yeah, this one's better. Into stage 1, coming out of the stage 1. Alright. Whatever, coming out of the stage 1. Quite clearly. Daily's above 10, 20, 50. 10, 20, sure. lot of chop inside of this. Has this nice little flush out. Builds this MB, builds this MB. Yeah, I mean, if you took these, it's good. But you must have taken them back here, though, right? And now you're waiting. But yeah, if a move starts, then it can definitely set up a little, like, sideways action there. Sure, they look fine. Man, what do you think about NQ longs for lower time frame this week? Yeah, sure. Looks fine. Looks good for longs. 5 hour above 1020. 30-minute flush to the 50 started to move higher and overall reaccumulation. Yeah. 5-minute building overall anticipation of the higher low. I mean, it looks like a, start of the week, nothing to do, but probably will flush out. Maybe it'll flush out nicely and then start building some MBs, and then yeah, you might be able to get some moves out of this thing. For sure. Or you can just get momentum, mini momentum moves like these off of there. Or like these guys. Sure. And gold. Yeah, I mean, gold's been really good. Yeah, gold looks great for continuations. Trades were definitely probably somewhere in these moments here. Coming out of that stage one, already moved with a few candles. I mean, definitely the better gold trades were all over this throughout the first few candles here probably. Moved, then probably through here, and then here, and then, like this is a little late now. You probably want to wait a little bit for something to build. You probably want to see this come down and then start a move. Yeah, these were beautiful. This literally looks like Golvex right here. Starts its move, flushes out beautifully, reaccumulation, starts your MB moves higher, FMBs followed by MBs, MBs. Beautiful move out of there. Beautiful move out of there. Yeah, and now this should be profit managed. This has made multiple moves off of that. This was like late term setup. I'd probably skip because you've had a few, especially this one right here. But this was like the last setup you probably would have taken. Yeah, now you probably wait for a mini flush and continue that move if it wants to go. Sure. Hi Antoine, just as you mentioned in the portal section, the flush phases must align with the previous ones to be considered as one, aka a higher low leg. I wanted to know whether the same rule applies to stage one as well. How can we ensure that the next stage one we choose a valid one to even look for price to emerge out of it to start stage two? Usually I want to see price stage one, there go sideways, off of a validation time frame, just above the 10-20. So these were really great examples of that. And if it happens again, that's where I would envision or look for the emerge through. Again, same thing. Might be a little bit longer, who knows. Or maybe even better, it might fail down, catch up with the 50, come up, and then make one somewhere here. And that will start a move. But yeah, gold still looks really good for longs. I mean, this thing has maintained good looks on longs since whenever we started continuing to follow it. I think it was back in here-ish, and it came down, and then we continued from here. Yeah, so right now it looks pretty good to continue this thing long. No reason we can't have this thing either make a candle or two and then start a move through like that stair step, or just keep going. I would imagine this is gonna go sideways for a bit and then start that move. But yeah, just keep an eye on those, and yeah, I mean, end of this week, based on the way this is moving, no reason this shouldn't be like at what, like 25.80, right? 25.50, somewhere up here. Gold looks pretty good. MacBook Air says, would this be a good trade to you considering we're still within a bearish swing, and how minimal the flush is? I was skeptical about taking on Friday, but it played out beautifully without me. What do you think, please? I think you should not be trading live if you don't have your full rules. So I would stop trading live, as I love to say. And I would work through all the webinars because, you know, it's something that I cover in a lot of them. But I don't see a trade here personally for my system. Nope. I don't see this as a trade. Maybe if it came off this low, came up, and then went sideways, then yes, there could be a setup here, but just by stopping here with that in mind, I don't see it as a trade. However, the beauty of the things taught here is that different people have different MBs or moves that they're happy with entering. So if a lot of your testing has shown this initial move up, and then you have an MB that you're happy to buy stop with a bigger stop, and it works, then good, then you should follow it. And in this case, as you said, it worked out beautifully, then you should be following it. But based on what I read there, it seems like you haven't actually tested your system yet, which means you should not be live. Okay. Got to go, night shift coming up. See you, brother. Coffee, 2 hour, 20 minute, 5 minute. Well, that's not what I would look at. I'd look at 5:30, 5 hour. Yeah, it looks really good for bullishness. I mean, we've been looking at this for a long time, but yeah, bullish looks good. Above all of them, starting its move. Yeah, this has easy ability to keep following through. No reason we can't. Absolutely no reason we can't. 30 minute. Yeah, this is absolutely beautiful. Yep. Multiple stage 1s and 2s, right? Stage 1, 2, 1, 2, 1, 2. Yep, same thing as the prior thing. Like, your entry should have been into the MB validations. Here's some later term ones that probably would have been losses, honestly. It looked like this would have been a loss. And this is end of week, so you don't even come close to touching it because these things do this all the time at open. Yeah, I mean, coffee looks great. If it wants to set up later this week, we can, but, you know, like, your entry should have been in here. No reason they weren't. Right? Out of the gate. Maintained those moves nicely, kept proving itself, and then went. Yeah, you should have been behind this. No reason not to be. And nat gas. Nat gas. Natural gas futures. Sure. Why not? So it started stage 2 out of this stage 1 above the 10 and 20 here. That's a good start. 30 minute. Yeah, we're starting some kind of mini stage 1. We've had a few stage 1s, 2, stage 1s, 2s. Now we're going through a stage 1. Yeah, this could set up with some moves this week for sure. What do we got here? Moving into overall accumulation. Yeah, let this flush out a bit. Let it start building MBs up. Probably makes you an MB here or a little bit higher. And then, yeah, you should start to see a little move out of this thing, for sure. Looks fine. There you are. Looks good. Not against it. I started backtesting of EVC and got amazing results. In 60 trades, I am at 30 RR plus. That's really good, dude. Almond says, really? I could, as mechanical rules is exactly 38 degrees MA if it makes me better results, even though the rule doesn't make really sense. Sure, you can use that. Girard says, how did you personally quickly calculate risk when on a lower time frame? Risk size calculator or some sort know how many to enter? Well, I know how much to enter, yeah. I don't use a calculator. Like, when I look at this, right, as an entry, and I know this is 4%, and let's say I want to risk 1% on it, then I know I need to put in about 25% of my account into this. That's it. Not as 25% risk, but as a position. So I can do that as a calculation using this, or just I can actually enter as a percentage of my account. And that's it. Like, I already have the calculation done. Right? Similarly, I can also just have this set to whatever account size I have. Let's say it's $1 million. And then I want to risk 1%. Well, now I know I should be entering 47,000 shares. That's it. Right? It tells me the risk right here as well. I've spoken about this a few times, but the TradingView literally has a calculator embedded for you. So that can do it. E looks very clean for the week on lower time frames. 30 second, 3 minute, 30 minute. Well, that goes without saying that a 30-second base system is probably going to have a setup every single week. So, yeah. Because all you're looking is basically for the 3 minute to make some kind of stage 1 and 2, stage 1 and 2. And I assume a 3 minute is likely doing that, you know, over and over again every single week. Yeah. Like, you undoubtedly should have been trading it around here for sure. If you skipped all of this for whatever reason, you should have been trading these. Now you have to wait. So, like, you know, if you're a 30-second trader, again, there's zero reason you didn't trade this. Like, zero reason. Yep. And those, I mean, you can literally see the moves. If you think to the portal material, just based on the anticipation of the higher low, like, you can literally see each move. It's almost like drawn onto it. This one would have failed, and then this is kind of that late stage kind of entry, right? But this is where, like, you wouldn't be able to take a trade like this on EU with proper risk. Like, even though on a stock, this would make me a lot of money, you know, you can't do this on EU. This is like one of the deceiving things about FX. People hear FX is like super liquid because, you know, $1 trillion or whatever, $7 trillion. But you can't take, you know, proper 1% risk, let's say, on this without getting slipped to shit. And I'm sure a lot of you have experienced that. If you try to take 1% risk on this on a generally decently sized account, you're getting filled like here. Your stop is actually like here. And then when you take a profit, if you take a profit, you're taking profit not here, but like here. So this and then you eat commissions and shit too. So like, yeah, like this is where, you know, you can't be trading these low time frames on FX unless you're entering through, you know, for bigger moves. Unless you're entering stuff like this. And even this is hard, right? This is like 1 pip, right? Like 1 pip, if you're risking 1% on 1 mil, that's 1K. Is it 1K? It's 10K, isn't it? 1% on 100K is 1K. And 1K on 1 pip is around 100 lots. And buddy, must I tell you, 100 lots on EU is probably the only place you might get away with it, but you're still getting slipped and you're still paying commission for that. So, you know, the reality is, like, at that point, you've already scaled your account too big. This is one of the main reasons I try to explain to people that, like, you need to be very aware that, like, you know, unless you're willing to stay at a smaller account, you have to learn to diversify across more assets, especially like stocks. Because stocks can be liquid enough where, say, a trade like this will work no problem. Like, you could even risk, you know, 50K on a stop this big, and it'll slip you maybe like to there, like a tiny slip, which is really nice. Why does it then state online that FX is most liquid? Because it is. The most money trades in FX every single day. But it doesn't mean shit. It's just like, it doesn't mean anything. That's all it is. Right? I mean, like, that's just the way it is. Yeah. You just get, I mean, listen, I've traded 100 lots on 1 pip stop losses because I used to trade that kind of system. And let me tell you, that was the highest of what I could do. It was amazing. No, it sucked. I would eat so much shit in commission and slippage. It was awful. Unless it was like a very good time of the day or something, or unless there was like a ton of orders in the market, like I would be taking, on a loss, I'd take like 1.5 to 2 to 3 R in losses. On a win that was like a 20 RR winner, so it's like 10 RR win, it'd only be like a 8 or 7 RR win. So I made money, Okay, it was great, but it was, you know, I was paying way too much in commissions. You felt it with 80 lots already. Yeah, 100%. Once you feel it for the first time, if you're actually scaling your account or you start in a bigger account, you're like, oh, this is why people go to other assets or move up in time frame, right? And like it happens instantly. You're like, got it. See you on the other side, you know. So it's done, done and dusted. And then you start realizing like all the people you see on YouTube, like bullshitting you through, are trading like $100 accounts, taking 0.5, 1 pip, 2 pip stop losses, right? Like, because you can get away with it with $500, you know, but when you start risking on a normal account, if you get funded with a 1 mil, like men funding, you're not risking 1%, even 0.5% on a trade like this. It's not happening. Why didn't you trade futures when you were entering on the 1 second? I just didn't. I wasn't as privy to them as I am now. I wasn't just aware. Again, I didn't even trade as many stocks back then, right? Now I trade everything. That's it. But that said, I don't feel like trading futures on the 1 seconds anyway. There's just no need right now. I'm happy to stick to 5 minutes as my lowest, because those setups happen every day if I'm looking at enough assets, really. And if they don't, they'll happen at least, there's almost always, what I've noticed, at least one setup a week or every 2 weeks that's going to be really good on some asset, which is more than enough, right? At the end of the day. Back then it was UJ and EU. Yeah, mainly EU, very rarely UJ, because again, UJ is a little bit less liquid, right? So those 100 lots, yeah, again, it's just, nothing was worth it except EU. So every day, all I did, if you guys remember, was 1 minute EU, and I would just follow the rules, right? I'd just be there, and I'd be like, okay, you know, you get an MB, I'd wait. Kept moving, moves, I'd wait. And then here, I'd start trading, right? These are the moments I trade. And these would literally be the rules I followed. I mean, the rules never changed. I saw someone in the MenTFX chats in the Discord be like, why did he change? Does it not work anymore? It's like, no, dude, it works. Everything works the same way. I've never understood this idea of like things are not working anymore. It's just that you just can't do it anymore. You get your MB break up, comes from here, so nothing happens there. Fails down, MB break up, MB1, yeah, looks good. You have your zone, right? And then here you're gonna have your 1 second entries. That's all I used to do. And then you'd get your 1, 2, I'd set up an MB long right there. I'd have a 1 pip stop, yep. I'd move to break even right there, and this would be my trade, right? I don't know if you guys remember, this is the exact rules I followed. This is all I did. Back then, 1 minute. These were my exact rules. Like nothing more, nothing changed. I could still do this, but it's just not worth my time. It's not worth me sitting there. It's not worth me doing it. But there you go. This is a trade I would normally be in, and you'd see me post in the Discord or whatever. 1 to 5 met, right? 5RR right there. The next would be at 1 to 25, right? So it'd still not be hit. 1 to 25 is here. Yeah, there you go. That would be plus 6.5, I believe. The next would be at 1 to 50. I mean, this was my entire system. I did nothing more. This would be my, and right now, this is all I would have. Okay? That's it. And then like now, at least, maybe you could have some MB trailing rules. So like you have MB1, MB2, put your stop there or something. Right, like these rules never changed. Nothing changed with this system. I could still use this system if I wanted to, but again, like, you're not going to be able to get beyond this amount of risk. So really what I'm talking about, like, if you want to trade this system is you're going to be trading around probably $300 to $500 a setup, right, per RR. So, you know, on a trade like this, if you hit something huge, which this would be a big trade, right? 25, yeah. This would be considered a big trade. You're looking at around 11R, 11 times 3, 33. So yeah, like you're looking at the moment secured, right? Like 3,300 profit. Now again, that's good for a lot of people. You know, off one trade or whatever, especially, but you know, I don't know how long you're waiting to get that set up or what other trades you're taking that also might be break evens or losses. But yeah, like this is the system I used to follow. But this is what you'll likely look at, right? At the time where I was risking my 1K per 1RR, I was paying so much, but yes, on a trade that even met 2RR, like this, it would be what? What's 1K times 11? 5. Yeah, around 10K or so. You do around 10K profit on a big winner, right? Plus or minus like a good bit, so like 8K or something, because you'd be paying so much, maybe even 7.5K. You'd be paying so much in slippage and commission, but, you know, and if this started to run, then great. You might be able to take out, you know, 20K out of the trade if it starts like one of the crazy, crazy runners. But you don't get crazy, crazy runners all the time, of course. And you also take losses and break-evens, don't forget that. But yeah, this was great. It's a good system. It was a good system, I'm not gonna lie. But there you go. So again, for the guy, hopefully he's in here. But for the guy that asked about it, like in the mentorship, I forgot where it was, but like he asked about it. I don't know exactly where it was. Oh, right here, right? Oh no, Cypher was. Oh, it's Roz, right? Roz, I think you're in here right now. Okay, I don't know where it is actually. I forget. But nonetheless, someone asked about it. And like, the concepts are the same if you wanted to follow them. You could still look for those kind of trades every single day. But I just moved myself more towards the trend-oriented mode instead of waiting for the one particular entry like this, right? Which, as you can see, they do work. They can and do work. And they move when they move. But now I just take some simpler trades and I can do so with more risk, which is really nice. Try that system on a stock. See, like, there could be an entry right here off of that. This was after hours though, so it's a little bit harder, but yeah, same thing. You can go inside of here and look, and you'll probably see the same thing. You might even get the entry, and then it does go, but you gotta be very careful with these, because again, these are, these can gap and stuff. Let's put on the extended hours. There we go. Message a great Webby. Thank you for your time. Got to run. Have an amazing week. Thank you, Sarath. I appreciate you, man. Have a good one. Yeah, actually, while we're at it, we're probably gonna wrap this bad boy up. I gotta hit a little show tonight with the family, with the wife. So and a little surgery for the baby tomorrow morning. Not too crazy though, just dentist related things. But then we're gonna get the week started right. Keep an eye on some good stuff. I probably won't trade tomorrow morning, but Tuesday I'll be on much more. All right. Hope all is good. All is well, man. Thank you very much. I appreciate you. John, you're chilling, bro. Just making sure you understand. But also, like, you know, some stuff it seems like I just spoke about, but then maybe it's just not coming across the right way or something. Who knows? Let's delete all that from there. Beautiful. We'll have to wait for the recording. That's all good. I'll get it posted up in a second for everyone.